much, Orlando Bravo, for joining us today, the managing partner of Thoma Bravo. So we're here at this private funds conference, the biggest of its kind, and you come out with an announcement that you've generated about $34 billion in fundraising, which is a huge number in an otherwise extremely tepid fundraising environment for private equity right now. How confident are you that you can deploy this capital and that you can ultimately see realizations from those investments given just the current environment?
Well, Leslie, it's really good to see you. This is like a yearly tradition here at Super Return, which is a nice celebration of private equity. I'm really happy to be here. Oh, we can deploy that and we can deliver. If you look at what we've done during the last 18 months, and that led to this fundraise, is we returned back to our investors in 18 months over $20 billion in cash. And private equity is all about performance. And a bit of the slowdown that you're seeing in the industry is because private equity isn't selling. We have never stopped selling our companies. If you can buy the right company and add a lot of value, you have enough room to give that buyer additional value, and you can sell your businesses and continue to get money from the investors. Now, then there's our ability to deploy it. We have never stopped buying either, which is very, very important. Private equity is not about market timing. As we say, we never buy the index, we never sell the index, we buy a specific company. So if you look at our trajectory through 2020, through the peak of 2021, through 22, 23, 24, and even recently with the Jeppesen deal, we have been consistently buying the software companies that we love. And our strategy consists of two key parts. We buy the number one player in software in a given category, and we look to completely transform that company operationally and from an M&A standpoint. There is so much opportunity in software to do that. I mean, we have the pick of thousands and thousands of software companies, many of which are growing extremely well, even in this market, that we can work with those management teams and improve.
It's a fascinating anecdote to the broader market, which has seen a lot of capital deployed in 2020, 2021 when rates were low. A lot of private equity firms overpaying for assets during that time frame and are having trouble. They're struggling to find exits, whether it be an IPO or M&A, because there's still somewhat of a valuation gap. You're not seeing that in the companies that you acquired during that time frame and the willingness to pay among the, whether it's the equity capital markets or various suitors out there, various buyers?
We are not. And that was a question that our great investors would ask us, and they did some great due diligence during the process, is what happened to those deals that we bought when the index was high? One of the best examples of that, and I've mentioned this before, is we bought Adenza literally at the market peak. If you look at the NASDAQ index, the past market peak, because now it's higher. And we were able to sell that company to NASDAQ, generating a 35% IRR on a lot of capital, and that deal worked for NASDAQ. What matters, in private equity, you're buying a business. People come up with a model. They say, okay, I can afford to pay this based on the value that I can add and my future cash flow and my expectation of a future multiple. People overpay when they miss their numbers. People overpay when the company, they haven't added enough value to the company, or people overpay when their future exit assumption was too optimistic. For us, we've been doing the same thing now for 25 years. Buy quality, add so much cash flow to our companies, and make sure that we're having reasonable exit assumptions. And that's been the case. That's why we've been able to sell all these companies over the last 18 months.
Now, a big theme in the private equity industry has been kind of the democratization of alternatives and access to retail investors. You have $184 billion in private equity specifically. Do you plan to expand that to retail? Do you like the prospect of democratizing the alternative space?
I like the prospect of democratizing the space. It is a really, really good asset class. That is why the best investors in the world, state pension plans, sovereign wealth funds that have so much capital, choose this asset class and have been actually growing it as a percentage of assets overall. Providing that opportunity to retail, and retail has many definitions. You can go to the ultra high net worth, and you can go all the way down to smaller investment sizes. I think that is a great thing. Now, at the same time, the industry has to be extremely careful about how to do it, because the first experience from that channel, from the retail investors into this category, is going to be instrumental into whether there's stickiness to it or not. So I have said before that I am cautious about these continuation vehicles that get sold to retail. There might be too many conflicts, too many different groups of investors. But overall, if retail picks the best managers that have a strategy that works in any market and are on the same basis and investing in the deal at the same time as institutions, I believe that's a very good thing.
All right, Orlando Bravo, thank you so much for being here from Super Return here in Berlin. I will send it back to you guys in the studio.
Leslie, thank you very much. That's our Leslie Picker. When we come back, a CNBC exclusive inside a nationwide retail crime crackdown as law enforcement and major retailers team up to target a surge in theft. Squawk Box will be right back.
Nothing stands still. Not technology, not the market, and not Franklin Templeton. We've been a firm in motion for over 75 years, always innovating. Today, we're a leader in public and private markets, digital assets, and custom tax management, empowering advisors with solutions to build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
When logic bends, when certainties shatter, when left is right and right is left, which way do you turn? Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
When you're the leader in disaster cleanup and restoration, how do you make like it never even happened happen? Let it rain, Randy! Woo! Yes! By being prepared for anything! Woo! Whatever comes your way, there's a pro for that.
Serve Pro, like it never even happened.
It is amazing. It used to have a collagen, used to have a probiotic, a green juice. I replaced it all with this Arma colostrum. If you don't know what colostrum is, it is amazing, but it is a bioactive whole food. It has all the essential nutrients you need for your skin, your gut, energy, focus, mood, performance, your hair, like immune system. It strengthens, supports all of that. I think the first thing I noticed was the energy and recovery that it had after workout, but if you want to try it, we'll try armor.com.
Starting this business, I barely had time to hire. ZipRecruiter has this feature called Zip Intro. It did all of the work of finding and scheduling the candidates for me. The goal was to make 2 hires, but I ended up making 4 in a week.
Try it free only at ZipRecruiter.com/CNBC.
It's Shaq, back with the best seat in the house. Wait, change that to the best seats in the house from the amazing Rooms to Go Motion Collection.
That's a lot of motion.
Something for everyone.
Power Motion sectionals, sofas, love seats, recliners, all big on style, comfort, and value. Motion for you, motion for me.
Your size to my size.
Rooms to Go has your back.
For a perfect fit.
So get moving. My style from my friends at Rooms to Go.
Etsy is the place to find Father's Day gifts, like original baseball hats by Blair, under $50, personalized luggage tags under $25, or handmade outdoor gear under $200. Your dad's one of a kind. Get a gift that gets him. Etsy has it.
You sure you're ready?
I'm in.
Introducing Hulu Perks.
Oh my God!
Go to hulu.com/perks now for sweepstakes, special offers, and exclusive deals.
Oh, no one else is clapping?
Don't miss out. Go to hulu.com/perks.
Retail theft has surged nationwide. Now, law enforcement agencies across the country are joining forces in what one state's attorney's office is calling a first-of-its-kind nationwide law enforcement blitz to try and curb the rise in retail theft. Illinois' Cook County Regional Organized Crime Task Force led the nationwide effort between law enforcement, the National District Attorneys Association, retailers, and the Retail Industry Leaders Association. So far, 11 out of the 28 participating states reported more than 400 arrests in the last week. Here's Courtney Reagan with the story.
Retail theft crackdown along one of Chicago's premier shopping districts. CNBC had exclusive access in Chicago, Ventura County, and Los Angeles as police arrested shoplifting suspect after suspect. Our cameras followed Commander Michael Ware in Chicago.
I have at least 2 undercovers in each store with their loss prevention. As the loss prevention members or either one of my undercovers inside observe a subject concealing items and they pass the last point of sale, the coordination, we have our sworn members outside ready to make the apprehension.
So far, 8 out of the 28 participating states reported more than 300 arrests, and more than 30 retailers took part in the operation, including Walgreens, TJ Maxx, Macy's, and Target.
When you give specific focus to a crime, it reverberates. When they see it's being prosecuted, it's being taken seriously, it absolutely deters conduct. They don't want to get caught.
Retailers reported a 93% increase in the average number of shoplifting incidents per year in 2023 versus 2019, and a 90% increase in dollar loss due to shoplifting.
The problem of retail theft has decimated our retailers in Chicago and throughout the country.
Back in 2024, our CNBC investigation showed in some cases the thieves are part of organized retail crime groups, stealing goods to sell for cash.
The idea is let's have one day where we focus and we concentrate on it. We share what we learned about these organized crime networks. So then that gives us more tools to take the entire network down.
Home Depot, which took part in the blitz, told us while overall theft is down, organized retail crime is still on the rise. Ulta Beauty says it coordinated teams across 9 states for this blitz. Other participating retailers we reached out to, including Macy's, TJ Maxx, Walgreens, and Target, said they're committed to partnering with law enforcement and pushing for stronger laws to combat retail crime. And we have a fuller piece that's going up soon online about this blitz that, again, was called by the agencies that coordinated this a first of its kind, sort of national crackdown. Mass arrests, 400 so far and counting.
I mean, how much of this is just the local laws that are part of the
so
problem?
that definitely is a critique, and that is certainly part of it.
It's not a felony anymore to walk out with $1,000 worth of stuff.
Right, and so we talked to Illinois because our cameras were there in Illinois, and we talked to that state attorney, and sort of from day one, part of her platform was that she was going to be more aggressive than her predecessor. And while the state law was that any felony could be prosecuted for shoplifting over $300, the predecessor's office really didn't go after folks unless it was $1,000 and more than 10 previous convictions.
Well, that's good to know.
So she decided to crack down on it, and they've said that so far since she took over in the beginning of December, that they have had 1,450 cases of shoplifting that they have gone after. Shoplifting or retail theft or organized retail crime, it sort of depends.
Well, call it what it is.
Well, it depends. Sometimes it is shoplifting, and sometimes it's organized retail crime.
No, what do they call it, though?
Oh, shrinkage. But one part of shrinkage or shrinkage in retail in general is just a loss.
All right, and I told you there's another term, and we couldn't come up with it. Well, AI will always come up with it, where you go outside your area.
Yeah.
Another thing that's no one needs, leakage.
Oh, leakage.
Shrinkage and leakage.
Right.
I mean,
I was like, what are you trying to come up with?
Retail leakage. Or out shopping, it's called. But AI knows everything. I said, what is that retail term for going to like a big box retailer that's not in your...
I wasn't understanding what you were trying to get at. Leakage. Of course.
Shrinkage and leakage.
Why is there so much more organized retail crime? Is it online? It's easier to fence this stuff?
I mean, unfortunately, a lot of the folks that we talk to is the online retailers and the marketplaces have made it fairly easy, unfortunately, even though they are doing their best to crack down. It's like a game of whack-a-mole, right?
And technology.
Yeah, and then, you go after one person and sort of their individual information. They just create a new account. They do it again. The product is gone. In some cases, it's even like a Facebook marketplace. So they're not technically set up as a retailer, right? And so it's a peer-to-peer. How do you sort of get involved in that?
It's a confluence of things kind of coming together.
Absolutely. And again, I think that the bigger fear, is just that the cash that is gotten from selling these goods is then used to fuel other criminal enterprises.
Right.
And that is a bigger concern of that ripple effect.
Well, and just the idea that you're losing stores.
Oh, of course.
Within these, a lot of times urban areas and other places where you're going to get destored.
Right. I think the rest of us are getting pretty annoyed about pushing buttons to get toothpaste and stuff.
Smash and grab videos.
Yeah. Right. Pretty wild stuff.
And what are employees supposed to do?
Right. You're not supposed to. In fact, most of them will tell you you're not supposed to get in the way of it.
And again, that's another part of the problem is because it's underreported. No one's reporting because, you got to get involved with the police and the paperwork. The employees aren't supposed to do anything. And
here, they're out in an hour, coming back to the store.
Exactly.
Right. Courtney, thank you.
Thank you.
And help them push the shopping cart forward. Coming up, investing in AI, Ben Narrison, founder of Tenacity Venture Capital, is going to tell us where he's placing some bets on the technology. Squawk Box coming right back.
Oh, these KDs are fire. KD, you work here?
Whatever, kid. Take notes.
Every shoe for every athlete, only at Dick's.
This is the one who helps everyone stay safe. An unsung hero in a building full of everyday heroes is just how he likes it. The industrial-grade products you need. Call, click, or stop by. Grainger, for the ones who get it done.
When logic bends, when certainties shatter, when left is right and right is left, which way do you turn? Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
Ever worry that you're drinking too much? Take back control with Or Health. Or Health provides access to medication proven to help. A daily pill to drink less, or to quit drinking altogether. Text CNBC to 710-710 to learn more.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-523-6900. Coventry Direct, redefining insurance.
$600 a year. If you're 50 plus, you could save up to that much by switching 2 unlimited lines from Big Wireless to Consumer Cellular. So why don't you pick up your phone while I take this hammer and see how we can cut your bill. Call Consumer Cellular.
When my hair started thinning, I didn't want to hear the wisecracks.
I was ignoring my hair because I was a full-time working mother, but luckily I found Nutrafol.
My hair was getting stronger and thicker.
And I finally feel like myself again.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
Michael Jordan's the only guy who can compare in terms of confidence.
When you're Steph Curry, there's brand value there, there's brand awareness.
Curry Inc., the business of Stephen Curry, premieres tonight, 9 Eastern and Pacific, only on CNBC.
In the past year, nearly half of venture funding is going to AI-related startups. Probably not that surprising. That's according to Crunchbase analysis. Joining us now is one investor who's bet on companies both outside and inside the AI ecosystem. Ben Narrison is here, founder of Tenacity Venture Capital, which invests in seed stage companies. You're too old to understand all this stuff, aren't you? I mean, do you have a bunch of 20-year-olds beating the bushes? And you're younger than I am. That was not a rap. But isn't it hard for you?
With age comes wisdom.
Do you have a bunch of people working for you that are scouring the ranks of these companies out in Silicon Valley, or?
So I've been doing seed investing for about 18 years. I've funded about 180 companies, and those founders are my eyes and ears, and they're also my diligence. Like, I funded a company recently called Hippocratic, which is an AI business that augments nurses to make calls to you when you go home from a hospital or doctor's visit. And Munjal Shah, who runs that company, I've known for 20 years. He is probably one of the most knowledgeable people I know around AI. So we would literally get together for breakfast every week and talk about sort of how this was evolving over the last 18 months. It took me 18 months before I made my first AI investment, because I did need to have a point of view. You can't just blindly say, this is good.
I mean, I can't imagine that. I guess I was speaking for myself. I can't imagine trying to navigate through. And there are a lot of startups with kids that are like 25 years old.
Oh, yeah. I mean, that might be too old at this point. You know, look, the way I thought about this is when you go back to the beginning of the internal combustion engine, when the car was invented, there were 2,000 car companies in the United States. There were 2,000 car companies in Germany. And so for a long time, I was like, well, how am I so smart I'm going to figure out who Ford would be? But then I thought about it, and I said, well, you know, Ford had a very specific point of view. They had something novel in the production facilities were set up in a totally different way. And so I do think...
And that they were marketing to the masses.
Yes. And you've got to find a reason why you can believe, look, some of these AI companies are going to be the biggest of the big, you know, multi-trillion-dollar companies, but there's going to be a lot of blood.
So what's the equivalent of the production line or some other novel device, especially when people talk about the commoditization of all of these tools?
So the problem I still suffer with is that engine is not novel. So what makes you distinct? And I've come to believe that data is only a temporary mode. A lot of people talk about the value of their data, their proprietary data.
That's temporary. That data is going to get sold over time. Because if you can make an extra $10 million a year by hoarding your data for yourself, but you can make $100 million a year by selling it to other people, you're going to sell it. So I think first to brand is very important. I think there are markets like the ones where you can't afford to be wrong, medical, legal, things like that. You can't go in front of a judge with some hallucination and say, but ChatGPT told me this.
So who's doing the best when it comes to, let's say, medical? Because I think that's pretty.
Well, I do love Hippocratic. I am an investor personally, but what they're doing is they're literally having the LLMs call. Imagine this. So today, I don't know, 1,000 people go into a hospital a day in some city. They go home. Some of them get calls for follow-up. Now, all of them will get calls, and the LLMs can navigate and figure out whether you're doing what you need to do and be helpful to you. And they also, here's one of the things that's fascinating about AI that people don't think about. It fundamentally changes the value proposition of time. You call in for help somewhere. The person on the other end of the phone is getting paid by the hour. They want to get off that phone. You talk to an LLM, it will talk to you for 12 hours.
Yeah, but will it give me the right answer? There's nothing worse than calling in and getting a machine and just say, customer representative, customer representative, get me out of this hell.
I am that. I am like representative.
I won't talk to him at all.
But the difference is the LLMs will actually interact with you at a level of intelligence that's sort of stunning. I mean, most of the people I know in AI are telling me already.
I've never met one of them so far.
Of course, because they're digital. But I've
never had a call from one of them.
That's fair. Well, hopefully you won't, because you won't be coming out of a hospital. Although I'm sorry you had that bad experience with your, HSA. But it's
you were watching. Yep.
Have an all-knowing system that can sort of ingest all the information and provide it back to you accurately. Now the trick is it accurate? But I'll give you an example, going back to the medical one. If this is following up with you, and you say, well, how have you been feeling since you got out of the hospital? And you say, well, I have some shortness of breath, immediately sends you to a human being. It knows when you're in a danger zone.
If I ask for a human, like if I'm really sick and I don't feel like dealing with this and I'm not trusting it, is there an out that says usually customer representative human?
Yeah, I mean, it's funny. I was listening to a call exactly like that where the customer did not want to talk to the AI, and the AI actually negotiated with them to show him that it was useful
that I'm smart enough
and let it stay on the phone. The guy finally laughed. He's like, okay, fine.
Fine, help me out. Yeah.
But there's so many. Look, if you think about the evolution of technology, I started one of the first web businesses here in New York City in 1993, took it public on the NASDAQ, got on the little screen above us. The web changed most things. Mobile changed many things. Yeah. Crypto didn't change anything illicit. It created a bunch of random currencies that could be traded in arbitrage. So that was, people called it Web3. That was an idiotic term. But AI will touch literally everything, one way or the other.
I believe that.
You had 2,000 pitches and only 3 of them were AI. So you do other things. I read that you invested in a wildfire fighting robotic system.
Very excited about that one. Just closed that deal Friday.
I just happened to know the Montana senator was involved with that. It's different than that. Tim Sheehy had a drone and, I guess, airplane company to fight. So this is different than that.
This is a Canadian company called Wildfire Robotics. And what they do is imagine a triple-bodied snake that slithers into the fire, delivers water and flame retardant, can do it at night when the fire's the weakest.
So it's not aerial.
No. And then when the troops go in, the stuff's there for them. So it makes it safer and better, and it can push back the fire. They can do up to a 5-mile-long fire break.
Wow.
And you think about, venture is really about finding opportunities that can be stunningly huge and cover most of the world.
Yeah.
It's not about, the acquisitions. I'm not dismissive of somebody that has a $300 million acquisition and it changes their life, but I want to see companies that can be, like, I have an AI company that is able to act as sort of a chief of staff inside your software. It's called Maestro AI. And so it watches all your people and it tells you where you need to help or where someone's doing well. It just, imagine you as a CEO or a manager, you've got 300 people, you don't know what they're doing, but the AI will. I can watch that and be super. That's useful to any business over 10 people.
Watch me how? Watch my
it starts with the engineers. So it's looking at the code, and all of that. So, it'll evolve. But I would love, there was a off-Broadway.
It'd be nice if a manager could actually check in and see how you were doing or care about those things instead of how quickly you're working.
Well, realistically, businesses care a lot about, when I was running my public company, we used to do once a week stand-ups, and I would say, how was your weekend? And that would last 30 seconds. Then we'd be like, okay, now let's talk about what's going well, what's going poorly for you in the business. It's a business, let's I don't need, maybe it's my generation.
I mean, what's going well in your business? That would be useful.
Exactly.
That would be
exactly.
useful.
Of the team you have, what are the things that are going well? What are the things that are falling behind?
Somebody hold my hand and ask me how my weekend was. But
I know,
it'd be nice
but
to check in with
I will tell you, the current generation seems to care a lot about a little more of the touchy-feely stuff.
Well, good luck with that.
Yeah.
Ben, thank you.
Hey, thanks for having me on. I always enjoy it.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, President Trump weighing in on trade early this morning, really early, like 2:30 in the morning. On his social media network, the president posted, "I like President Xi of China, always have and always will, but he is very tough and extremely hard to make a deal with." The White House has said that Trump and Xi would likely speak about trade this week. Elon Musk blasting President Trump's signature tax and spending bill recently passed by the House. In a post on X, Musk called the bill a disgusting abomination. We haven't heard yet from President Trump on Musk's comments, but Speaker Johnson has made some comments on it, suggesting that Elon Musk is in it because he's mad about not getting his EV and solar tax credits. And the Fed announcing it is lifting a nearly $2 trillion asset cap imposed on Wells Fargo 7 years ago. That followed years of missteps at the bank. Don't miss Wells Fargo CEO Charlie Scharf in the next hour on Squawk on the Street. This was a really big win for Charlie Scharf.
And checking the futures this morning, up again after a pretty good turnaround in the first 2 days of this week from early morning weakness in the futures, and then we closed higher. And a nice day yesterday has the S&P now less than 3% from an all-time high, and some more upward momentum this morning. Let's get to the markets. It's Mike Santoli. I don't know, Mike. We've seen markets like this before. By all, they should be going down. It should be going down. There's worries, front and center tariffs, all these any given day, and maybe they still will. But they seem to find a reason or no reason to go up, and usually that might continue. Do we get to new highs in your view soon, Mike?
Yeah, I mean, I think the odds do favor getting to new highs relatively soon. That's what all the historical pattern stuff would tell you. And as you say, the character of the market recently, this persistent bid, especially intraday, it just has the feel of a market that is feeding on the lack of fresh news. The more of the same is okay when it comes to the economic numbers that are coming in. We can deal with a wait-and-see Fed for the moment. Look, maybe this is just a window in time when that's all going to work and the market's going to grind higher because people felt underexposed to the market after that big sell-off. You know, it's interesting because it has been this persistent rally, one of the stronger rallies off of a 20% drop that we've seen in history, and yet we're back to levels that we first got to about 7 months ago. So that's why you're going back on ground you've already covered, and obviously it's also been a narrower market. I shouldn't say narrow in terms of the number of stocks going up, but in terms of the leadership and where the push higher is coming from. Take a look at the momentum ETF. This is the momentum factor within the S&P 500. Basically, the strong staying strong, leaders continuing to lead, and that's made a new high. And that's not just technology. Yes, it's Broadcom and it's Netflix, but it's also Berkshire Hathaway, Walmart, JP Morgan, Visa, Costco. So kind of industry leaders, and this again is the way the market's saying people just want to get involved. Maybe the Sell America trade got overdone in the short term, and now, at least for the moment, this persistence of strength is hanging in there. It's not telling you that much about the macro, except people want to get back involved in this market. Now, take a look here at one area where the backup in bond yields really is taking its toll. This is the home builders, and this goes back 3 years. So, you're really kind of on this shelf from this high from back in 2023. We do have more supply in existing homes, and this is no longer kind of a leadership group. So right now the market is sort of localizing where the pain is in terms of rate sensitivity, although so far on the consumer side, you're not seeing really that much erosion. I think the market was actually feeding off of that yesterday as well.
All right, Mike. Less than 3%. Yep. Thank you. See you later.
All right, Crowdstrike reported adjusted earnings per share above the expectations for its latest quarterly report, but the company's second quarter revenue forecast was a bit light. Costs rose in the just completed quarter, partly because of a broad software outage last summer. You can see that stock this morning down by about 7% in the pre-market. Joining us right now is Joseph Gallo. He is Jefferies' software research analyst. Joseph, what happened? Is this reaction from the stock appropriate?
Yeah, I think it's appropriate. So what happened was ARR, annual recurring revenue, grew 21.6%, but that was shy of elevated investor expectations, given the stock was up 43% year to date. And as you said, revenue was a little bit light in 2Q on the guide, and that was due to the discounting programs that they've given over the last 2 quarters, given the IT incident. We were cautious into the print because we've seen this movie play out a couple times this quarter with other cyber names. Cyber stocks have had a really good run year to date. And so I think this was broadly a good, not great quarter against high expectations.
Jim Cramer has the CEO of Crowdstrike on tonight. What questions would you ask of him?
I think the biggest focus areas I would say is, hey, how confident are you in the re-acceleration of net new ARR? How confident are you in the acceleration of total ARR growth in the second half of the year? You gave a lot of free stuff away to your customers over the last 2 quarters. Are they going to pay for that in the next 2 quarters? And then ultimately, everything trades on cash flow. What's your confidence in your free cash flow margin next year?
They are saying that they are buying back stock to show their confidence in this. You think that's money well spent?
Yeah, I think that's good money spent, but also I would like to see them continue to invest in the business. I think, these are one of the more modernly architected platforms. And so I think you'll continue to see them invest. And then they also should invest highly in AI. And they've talked about looking at other AI companies to be the best position there.
Who are their biggest competitors? If you worry about them losing customers, where would those customers go?
I think that's the beauty of CrowdStrike long term. The 2 biggest customers are SentinelOne and Microsoft. And right now in the enterprise, you need best of breed. And that's where CrowdStrike really excels versus Microsoft. And then, SentinelOne, fantastic technology, but unfortunately hasn't been able to execute against this opportunity. So we feel very confident in CrowdStrike's competitive position long term.
Okay, if that's the case, would you buy it here or are you skeptical?
Yeah,
I mean, to see the sell-off.
Yeah, listen, I don't think the sell-off is surprising given the slightly less than expected performance, but we're buyers here. I think this is one of the best positioned long-term platforms. They've got a clean competitive landscape. They do the hardest part of cloud security very well. And as I said, they're more modernly architected than a lot of the other larger cyber vendors. And that allows you to expand into other categories easier. And so I think you'll continue to see that out over the next couple of years. Joseph,
thank you.
Thank you very much.
All right, coming up, jobs data from the private sector. The ADP employment report for May is going to be released at 8:15 a.m. Eastern Time. We'll bring you the numbers as they break. And Wisconsin Senator Ron Johnson will tell us why he wants to split the big reconciliation bill into 2 parts. Squawk Box returns in a moment.
At IHG Hotels and Resorts, you can unplug
Order
for the
submitted.
day or plunge into a long weekend. Savor the moment or savor the details. Earn points for free nights with IHG One Rewards.
Down, up, right, left, inside, out. Sometimes it's hard to make sense from nonsense. Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
At Odyssey Trust, we're more than just a transfer agent. We're on a mission to deliver peace of mind by making things simple, fast, and easy. We're proud to be the trusted partner of over 1,000 clients in Canada and the United States.
Ever worry that you're drinking too much? Take back control with Or Health. Or Health provides access to medication proven to help. A daily pill to drink less, or to quit drinking altogether. Text CNBC to 710-710 to learn more.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, it's easier for talented candidates to find it, which makes it easier for you to hire them. Visit Indeed.com/hire.
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Golf? It's always bigger in Texas.
A remarkable round of golf. You are kidding me. Absolutely stunning.
Man, this is amazing.
It's awesome.
It's a party out here.
Live is lit. Crushers start the party here in Dallas.
Where do you go to a golf tournament and get an amazing concert? Nowhere but Live Golf.
Get your tickets to Live Golf Dallas.
History only repeats itself every so often. Classic Chevrolet. Back-to-back #1 Chevy dealer in the world. They are undeniable, with more new Chevys than ever before. All priced to drive you forward for less. History is still in the making. That's why we'll put in the work to win again. This is Texas. This is Classic. Shop for your winning upgrade today.
Well, welcome back to Squawk Box. We are awaiting the May ADP private payroll numbers. Ahead of that, we're watching the futures as well. And we've been in the green all morning. It's a reversal from what we've seen the last couple of days. But the last couple of sessions, we've been in the red in the morning, and we have ended in the green at the end of the day. In fact, we've seen 4 higher sessions in a row for the Dow, 2 in a row for both the S&P 500 and the NASDAQ. S&P right now is only about 2.8% from an all-time high this morning. S&Ps are indicated up about 15 points. The Dow is indicated up another 93 points. The NASDAQ indicated up by 60 points. We've watched Treasuries this morning, and it looks like the yields are a little higher this morning, although that's been changing for the 30-year and the 10-year. You do see the 30-year at 4.97, the 10-year's at 4.45, and the 2-year is at 3.96. Finally, the dollar, which has been weaker throughout the course of this year, is down 8.5% for the year to date. It's unchanged this morning. May ADP payrolls showed a gain of 37,000. That was the lowest increase since March of 2023 and far below the estimates of a gain of 110,000. You had total private payrolls that were up by 37,000, goods down by 2,000, services up by 36,000. Non-farm payrolls, the estimate was up 125,000. And joining us right now to talk more about all of this is Neela Richardson. She is the chief economist at ADP. Neela, this is a little bit of a surprise on the headline. You want to walk us through what's happening here?
Sure. So the lower number is really driven by shedding of jobs in the goods sector. We saw manufacturing, which actually had some surprise increases earlier this year, shed jobs in May. So that hiring momentum starts there, but it extends through several parts of the services sector, too. We saw losses in professional business services. We saw losses in healthcare jobs. So anyone who's looking at the Friday jobs print, remember that healthcare was a big, strong job creator last month. Trade, transportation, and warehousing also shedding jobs, also was up, trending up in the BLS report on Friday. But where I want to really clue in, Becky, is on small firms, because the smallest firms lost the most jobs in the May ADP report. I think that is something that we should all be paying particular attention to, because employment under 250, that's responsible for 70% of workers in the United States. So as goes small firms, as goes the labor market.
Well, I mean, that's been the big question. A lot of the policy changes that have come from the administration are things that large firms have a better shot at navigating. They can kind of lobby more effectively for it, and they have the ability to deal with some of these changes with a larger workforce. They can be more proactive on some of these issues. We've certainly seen that reflected in the stock market. The Russell 2000 has fallen well below what you would see with the other major averages. How does this compare, though? You're not talking about a massive loss of jobs. It's down 13,000.
No, we're not. And that's an important point. This is not a labor market that's collapsing. This is a labor market where hiring is hesitant. It doesn't mean that these firms don't want to hire or aren't positioned to hire, but there is an uncertainty weighing on that hiring, and we've seen that for the second straight month. So the good news, I guess, is that it's a market that could turn around.
Order canceled.
And I'd also point to leisure and hospitality, which saw 38,000 gains.
Yeah, that's a surprise.
And it matches the JOLTS data from yesterday, which saw the job openings in that sector and entertainment go up. So in terms of consumer resiliency, we still want to see movies. We still want to go and get our entertainment. That sector is still strong. Consumers are still expected to spend on things that bring them entertainment.
The Fed's going to be watching this very closely. We spoke with Nick Timiraos earlier this morning, who just said that even if you get a good jobs report on Friday, it's not necessarily something that would clear the way for the Fed to cut rates yet. But if you do see a couple of weak job reports, or at least the unemployment number moving higher over a couple of reports over a couple of months, that would certainly push the Fed to be more likely to cut rates.
This is why I think the labor market is solid, because if you look at the 14.8 million workers that we can match uniquely in our data set, it's all about pay. And for the Fed, I think it will be about pay and wages. And we're seeing wages stabilize at a pretty robust number. So if you changed a job in the last 3 months, according to our report, you're going to see about a 7% increase from one salary to the next. That signals a strong labor market in terms of wage growth. And I think the Fed will be paying particular attention to how wages are evolving over this time.
Neela, is it too simplistic to think that smaller firms might be more, have more tariff angst, or more the effect of tariffs hit them earlier or harder than big firms?
Smaller firms have less options.
That's what I mean,
They're price takers, they have thinner margins, and they don't have access to the capital markets. They're dependent on largely bank loans or friends and family loans. So we're talking about the smallest firms. They don't have the same options. And so that uncertainty in hiring, and also every headcount matters for a small firm. They can't take it for granted. They can't overhire as easily. And so within this caution that we're seeing firms of all sizes hiring more former employees back, again, trying to get the most efficiency from the worker, and that often means hiring someone you've worked with before.
But as a worker, it pays to leave. You're going to get more. You're much more likely to get a raise if you leave.
So if you can work the system, become a boomerang hire, leave, get a higher salary, come back to a higher salary, that's a good place to be in this labor market, because it's still tight enough to support that kind of churn.
Let's take a look at yields. Rick Santelli points out that yields are down on this news. We've seen the equities futures give back a little bit too. Okay, now across the board, the entire spectrum, you are looking at weaker yields. The 5-year is now at 3.99, the 2-year's at 3.92. And the 30-year still at 4.95, but it had been at 4.99 before.
Everybody's waiting for a Friday number, someday, a Friday number to show some tariff
weakness.
And
4.42 is the 10.
So 125, I saw that on the screen. Is that the estimate for non-farms on Friday?
That's about it. So what that number, if it's above 100, I would read that as a solid number for the BLS report. I think that's a number. If it's above 100, I think that we would take that number. I would just caution that there's no superheroes in this labor market. There's no sectors that are going to be dependable as job creators, and that's different than what we saw in 2023 and 2024 where healthcare and leisure and hospitality were almost always strong. I wouldn't depend on that for Friday.
Neela, thank you. Anything really weird that you think is the strangest thing in this report, or?
I don't think it's a weird report. Okay. What I would point to is that the hiring momentum from the beginning of the year has slowed, but wages continue to be robust. That means that firms overall are getting the productivity they need for the workforce, and to me that signals that layoffs are not imminent.
Okay.
So that's the takeaway for the report.
I mean, there was a time when a little weakness in the labor market would help the stock market because of
the rate cuts would come.
It has to be a good rate cut, which is an inflation-based rate cut, not a weakness-based rate cut.
That's right.
Yes, but this is just very minor, and we don't even know if this is the start of anything or not. Really.
We have seen 2 straight months of weakness, so I do have, it's gone a little bit more from minor in my mind, but you know, as wages are holding up, that means that they can support the consumer. So if you're looking at the big picture of the jobs market, I would say that wages are the place to look, and that means consumers can keep spending with historically low layoffs.
I'm sorry to interrupt. I'm being told that the president just weighed in on something. I'll just paraphrase it. Too late, Powell should cut rates now before it's too late. Is that what he said, basically?
Those lines, yeah.
Right after the AD, might be.
I think he's watching.
More than a coincidence that he did. Thanks.
When things are uncertain, every data point is to look at.
ADP number out. Too late. Oh my God. Yeah. So, Neela.
You know, I would take this number in the trend in which it is. We're seeing a little bit of softness in the labor market, and I think it's worth matching that with the Friday report to look at the big picture.
But you say it here and it comes out there. This was from you. Trump just did that because of the stuff you're saying, Neela. That's crazy, isn't it?
I'm an economist, and the economy matters a lot, right?
I hope he saw the ADP number on this show. Right? Not so much. Thanks. Coming up, Republican Senator Ron Johnson's going to join us. He's playing a key role in the future of President Trump's tax and spending bill. But first, as we head to break, we want to tell you about a downgrade for Apple, Needham, going from buy to hold. And a note to clients, analyst Laura Martin calling $170 to $180 a better entry point for investors. The stock 21% from its December high at this point, but if you'd like to buy it even cheaper. Squawk Box will be right back.
Comcast Business doesn't just power businesses. We help turn them into logistics mastering, supply chain transforming, seamlessly restocking, frictionless paying, poke bowl ordering, cyber securing, mobile access granting, data managing. Welcome to the worlding modern businesses. Powering the engine of modern business, Comcast Business.
Is a Bitcoin ETF the same as owning Bitcoin directly? While Bitcoin ETFs might offer a familiar face, they lack the true ownership and flexibility of directly investing in Bitcoin. With iTrust Capital, you can buy and sell real Bitcoin 24/7 with the tax advantages of an IRA. Real Bitcoin means no middleman, no restricted stock market hours. Choose the path of direct Bitcoin investment with iTrust Capital, because access equals opportunity. Invest in Bitcoin at itrustcapital.com today.
Introducing AG1 Next Gen, the daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
It is amazing to have a collagen. I used to have a probiotic, a green juice. I replaced it all with this Arma colostrum. And if you don't know what colostrum is, it is amazing. It is a bioactive whole food. It has all the essential nutrients you need for your skin, your gut, energy, focus, mood, performance, your hair, like immune system. It strengthens, supports all of that. The first thing I noticed was the energy and recovery that it had after workout. If you want to try it, try arma.com.
Dang, your score is higher than a giraffe on a pogo stick.
That's because I bank fee-free through Chime. Plus, I build credit through everyday purchases.
That's a big perk.
Yeah. When my hair started thinning, I wanted to attack the problem head on. I chose Nutrafol because it was drug-free, which meant a lot because I didn't want the side effects. My thicker hair gave a huge boost to my social life, and I really feel the best I ever have.
Michael Jordan's the only guy who can compare in terms of confidence.
When you're Steph Curry, there's brand value there, there's brand awareness.
I wanted to create my own entity to build true value.
What do you want your legacy to be?
Curry Inc., the business of Stephen Curry, premieres tonight, 9 Eastern and Pacific, only on CNBC. CNBC, live ambitiously.
Welcome back to Squawk Box. There's the futures right now, which have definitely come down a little. We were up 50, we're now up 8 or 9, or maybe we were up a little bit more. We're up 80, but nothing huge yet. But there was, you would say it maybe is after much lighter than expected jobs data from ADP, which I think, what was it? It was expected to be a little bit higher. What did it finally come in at? 38,000 or
37.
something? 37 versus. I think they were looking for 100. We have a big jobs number coming on Friday with 125,000 for the BLS non-farm payrolls. We'll see whether that number comes down based on what ADP said. Interest rates have dropped ever so slightly across the complex, but you can see, normally that would be construed as good unless it's for a bad reason. Right.
In the meantime, Warner Brothers Discovery shareholders voted to reject the multi-million-dollar pay packages of CEO David Zaslav and his leadership team. The company said more than 59% of the shareholders who voted rejected the compensation, including Zaslav's $51.9 million package. The vote is non-binding, but the company's board did say that it takes the results of the annual advisory vote seriously and looks forward to continuing its regular practice of engaging in constructive dialogue with shareholders. Shares of Warner Brothers unchanged after this. Those shares are down about 56% since the company was spun off from AT&T and merged with Discovery in April of 2022. When we come back, the man who holds a lot of power right now on President Trump's tax and spending bill, Senator Ron Johnson, is with us live. That's next, right here on Squawk Box.
Every shot is an opportunity, and success requires drive, resilience,
get it there,
and sometimes luck. But what if luck had less to do with it? What if we had the tools to help us practice smarter, the insights to gain an edge, and the data to inform our strategy? Taking our games from that to this.
Yes, sir.
KPMG Performance Insights are transforming the game for the entire LPGA Tour.
Down, up, right, left, inside, out. Sometimes it's hard to make sense from nonsense. Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire.
Whether Dad's vehicle is his prized possession or the family hauler, he needs to protect it. This Father's Day, give him the gift of WeatherTech. From laser-measured floor liners and cargo liner to keep his interior pristine, to seat protector to guard against stains, and sunshade to block harmful UV rays. The Cup phone perfectly secures his phone while driving. Order these American-made products or a gift card at WT.com. Happy Father's Day.
Michael Jordan's the only guy who can compare in terms of confidence.
When you're Steph Curry, there's brand value there, there's brand awareness.
Curry Inc., the business of Stephen Curry, premieres tonight, 9 Eastern and Pacific, only on CNBC.
A living room with the power to change everything. The Modular 2 and rooms to go. Now with even more possibilities, like this sleek, super soft leather. It's one collection that gives you the power to relax, the power to recharge, the power to create the perfect sectional for any space. Just choose your pieces and transform your room, easily and affordably. I'm Julianne Huff, and this is what's possible with the Modular 2 at Rooms to Go.
President Trump and Senate Majority Leader John Thune are pushing to get the Republicans' reconciliation bill passed by July 4th, but several senators are saying there needs to be more spending cuts. Our next guest has proposed a two-part bill. Joining us now, Senator Ron Johnson of Wisconsin. Senator, it's good to have you on. I know the president really has always been pushing for one. That's why it's called One Big Beautiful Bill. How would that help your case or your cause by splitting it into two? How would you do it?
Good morning. Well, first of all, we'd actually have time to do the work to forensically audit every line in the federal budget, every program. You know, there are over 2,600 programs in the federal budget. We haven't taken the time. You know, DOE showed us how to do this, so we ought to follow their example. But, you know, the bottom line is this is a budget reconciliation process pretty well devoid of actually talking about numbers. About the only number we heard out of the House was $1.5 trillion, which sounds like a lot until you put it in context of the CBO's 10-year projection of $89 trillion being spent, $22 trillion of projected deficit over the next 10 years. That's a $2.2 trillion deficit per year completely unsustainable, not even coming close to returning to a reasonable pre-pandemic level of spending. So again, we're just not taking the time to actually debate this. And by the way, I heard earlier discussions of AI. I'm using AI. For example, this morning, again, using that basic CBO projection, 1.8% growth is what they're projecting, 2% inflation. I said, well, what if we grow at 3% with 2% inflation? What's that going to do in terms of revenue? Over 10 years, about $500 billion. We lose revenue the first 4 years during the Trump administration, probably gain revenue in the last 6 years. So again, that's the kind of analysis I'm doing. That's what I want to put into a report I want to issue here within a week or so. Just laying out the basic numbers, which we have not looked at. We haven't looked at the most relevant piece of information. The fact that our deficit is out of control, it's on an upward trajectory, when what we should be doing is bending the curve of the deficits down in this reconciliation process. We're not even coming close.
Senator, during President Trump's first term, before COVID, we were under $1 trillion, and that's still a lot in the deficit. And then the pandemic hit. Now suddenly we're at $2 trillion, and we just seem to be locked in there. I know that there's some, there's interest and there's other factors that are going against this. But your idea to get back to pre-pandemic spending levels, I wish you could just flip a switch, but you can't. And every single thing that you take away, there's going to be some constituency that it's going to be the end of the world, or that's what they're going to say. What would it entail to get back to pre-pandemic spending levels? Where are those cuts?
So again, let's look at the numbers. 2019, we spent $4.4 trillion. This year, over $7 trillion. Next year, projected to be about $7.3 trillion. So again, that's a massive 58% increase in just 6 years. So rather than basically, leave most programs untouched, only focus on a couple, you need to go line by line, program by program. And I have to believe in $7,000 billion worth of spending, $7 trillion. You will literally find hundreds of billions of dollars that if you don't spend it, nobody would even notice except the grifters who are sucking down the waste and the pork. But you have to do the work. That's going to take time. It's going to be a massive effort. We haven't done the work. We haven't taken the time. But again, in proof is I've laid out these options for pre-pandemic spending going back to Clinton, Obama, and Trump, 1998, 2014, 2019. You grow all outlays except for Social Security, Medicare, and interest, leave those as is, and then grow all other outlays by population growth and inflation. You end up with a baseline budget somewhere between $5.5 and $6.5 trillion. That's where you start. But you have to do the work. You have to do the analysis. I know the numbers. I've been forcing the numbers on my colleagues. In the Senate, we're going to look at the numbers.
Senator, you said you're using AI to kind of run through some different scenarios. That's interesting because that's sort of what Jamie Dimon was suggesting the government do last week when he was speaking at the Reagan Library, except for he was suggesting that you stress test it for much worse times, kind of like the banks have to do these stress tests. Did you stress test it to find out if GDP dropped to 1% or if it dropped to negative levels, what that would mean?
I could literally do that in about 10 minutes. So yeah, that's what I want to lay out in my report. We'll stress test it. I just did the first one on the rosy scenario, 3% growth, which we haven't achieved. By the way, the last 20 years, we've averaged 2% growth. So Reinhardt and Rogoff talked about in their book, this time it's not different, or whatever the title was. Once you hit 80% of GDP of debt held by the public, you harm economic growth. We may be at that point right now. We're way beyond 8% or 80%. So again, we have to look at this, and my latest chart just shows what you said, Joe. Obama, his last term, he averaged deficits of $550 billion. Trump's first 3 years, $810 billion. Then, of course, he had COVID, $3.1 trillion. Reasonable leadership would have brought it back down to under $1 trillion. Joe Biden averaged deficits of $1.9 trillion, and that's where it starts. We're going to have a $1.9 trillion deficit rising to about 2.5 over the next 10 years. Again, it's completely unsustainable. This is insane what we're doing. No American family, if they had an illness, had to borrow $50,000 to pay for medical bills. If that family member got well, would keep borrowing $50,000 and spend at that level. That's what the federal government has done. It's completely unjustified, but we need the time to do the work. And I'm sorry, the one big beautiful bill, we haven't taken the time.
So, Senator, it's been said that if there was like a fairly small bill that just extended the 2017 tax cuts, do you think you could get both sides, you know, you got people in the Senate. There's some like you. There's others that are have a totally different situation with the states that they represent. Same within the House. So you can see the Freedom Caucus, and then you see, you know, on the other side, it's impossible to please everyone all the time. That's why this isn't going to get done. I guess that's your point. It's not going to get done in one big bill, right? If you try and throw everything in there, what would it look like? Where would you do President Trump's tax on tips and on overtime, and which part of the bill would that be in? How would you split it up?
So I would focus on the areas of greatest agreement, supplying, you know, funding for the border and border security. Defense, I guess we have to do that. I would take whatever spending cuts, and the House done pretty good work on you know, their limited number of spending cuts. I'd bank those. I would extend current tax law, take an automatic tax increase off the table. I would extend the debt ceiling for a year, and I leave everything else for a second bite at the apple here, where there's the pressure to do it. We can't do this in one bite of the apple. It's
and
obvious
you can do both with reconciliation.
Absolutely right.
You can do both. You can do it twice.
Absolutely. We've got fiscal year 2025. That's what this reconciliation bill is. We're already in. We should be debating a 2026 budget right now. So we've got that reconciliation. You can do 3 bills in each reconciliation package. We're bundling up just one bill in this reconciliation. So we have all kinds of bites of the apple. We should use that. And President Trump has to realize the debt ceiling is leverage for him to accomplish what he said he wanted to accomplish in the State of the Union: balance the federal budget. We're not even coming close. We're not even turning the deficit trajectory downward. It's skyrocketing.
Senator Johnson, you're often mentioned in the same breath with Senator Rand Paul. He agrees with you on a lot of these different issues. We had him on the program yesterday, and last night he put something out on X in response to Elon Musk's statement on this. Elon had tweeted or had put on X, "I'm sorry, but I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination." Rand Paul put up this tweet. He said, "I agree with Elon. We have both seen the massive waste in government spending, and we know another $5 trillion in debt is a huge mistake." Do you agree with Rand Paul on this?
Well, again, I'm going to be focusing on the numbers. Use CBO's 10-year base as our baseline. Their projection is a baseline. And then let's start honestly discussing where we're at. And, you know, again, my latest chart just shows the unsustainable nature of this, how deficits are going to continue to skyrocket. You know, we're not even coming close to even having a possibility of balancing the budget. So I'm going to focus on the numbers. I'm not going to be insulting anybody.
Does what Elon said give you additional kind of help in your quest on this?
Yeah, it certainly bolsters our case. He was in the inside. He showed us with President Trump how to do this. You know, contract by contract, line by line. We have to do that forensic audit. We don't take the time. Again, we exempt most programs, focus on a couple, tweak them, get a CBO score. That's really out of context. I mean, the context is all about $22 trillion in expected deficit. And by the way, that counts about $4 trillion of tax increase, which I don't want to incur. But if we don't incur that, you got to make up for about $4 trillion in revenue. How do you do that? That's why I'm starting to do these AI sensitivity analysis. And by the way, mindful that AI is often confidently wrong. You got to check your work. So I haven't checked this work. But again, that's how you approach this. You actually look at the numbers. Take the personalities out of it. Take the invective out of it. Take the insults out of it. Look at the cold, hard facts. If you do that, you get depressed really fast, and hopefully it'll cause all of us to act. This is our one chance. This is our once-in-a-lifetime opportunity to reset government spending at a reasonable pre-pandemic level. We can't blow it. We can't count on winning another election, having another shot in 2027. This is our time. We have to take this seriously.
So let's say that, you know, you stick to your guns here, but at this point, if I characterize what you want to do as a long shot, is that overstating it? I mean, I can see Senator Thune, Majority Leader Thune. It's not a long shot.
No, it's not a long shot because we have enough of us who are going to say no. Listen, we all support the president. We want to see him succeed. Yes, we want to see him succeed. Yeah, we want. But again, my loyalty is to our kids and grandkids. We're mortgaging their future. So there's enough of us who have that attitude that very, very respectfully, we just have to say, Mr. President, I'm sorry. One big beautiful bill was not the best idea. We should have done what John Thune always wanted to do: split this up into multiple parts. I always said 3 parts. He said 2. Time's crunch. Now it's back down to 2 parts. Uses of 2 budget reconciliations, but you need to keep enough on the table to force us to come back here and do the work, take the time to actually reduce spending to a reasonable level.
I mean, the Senate is going to look at the House version, and the Senate's going to do its own version. It just seems like it's in motion already. And
well, again,
go ahead.
So the president and Senate leadership has to understand that we're serious. They always say, "Oh, we can pressure these guys." No, you can't. Okay, again, we're being very respectful. I ran in 2010 as part of the Tea Party movement. We were mortgaging our children's future. We were $14 trillion in debt then. Now we're over $37 trillion. We're serious about this. They need to take us seriously. Don't insult us. Work with us. Lay out the numbers. If you can say that our numbers are wrong, fine. Let's work through it. But again, every analysis I have, there's greater upside risk to that deficit. Interest rates are moving up. If we go increase interest rates 1%, that's another $4 trillion over 10 years in terms of deficit. If we don't replace the $4 trillion, that's $4 trillion of lost revenue. Again, and growing the economy 3%, it adds to it a little bit, but mostly in the out years. So again, come to the table. Let's look at the numbers. If I'm wrong, prove that I'm wrong. But let's do it with respect, but mainly respect for our children and grandchildren. This is immoral, what us old farts are doing to our young people. This is grotesque what we're doing. We need to own up to that. This is our moment. I can't accept this scenario. I can't accept it, so I won't vote for it unless we are serious about fixing it.
And who do you think, okay, Rand Paul, you, that it would still pass? Who else are you talking? Mike Lee. Who else are you talking about, Senator?
Yeah, again, I don't want to speak for others, but yeah, Mike Lee, Rick Scott. We've been. I think there are a lot of people that aren't as vocal as we are that support what we're doing. And again, they can't dispute the numbers. Again, we didn't talk about numbers in the House process. If the White House just comes and starts insulting us, I'm sorry, I got the numbers to back myself up. Again, if my numbers are wrong, fine, prove me wrong. But I think I have the numbers, which is, I think, one of the reasons they probably won't insult me, and that's good. Let's say we don't split it, and it's going to still be one big bill. What could the Senate put in the bill? There's nothing that can be done. It won't pass. And there's nothing. Not in such a short period. Not in such a short period of time. What would you do? Make a couple tweaks. Yeah. So if it were something with I know Medicaid, you think we're missing the opportunity to reform that as well. But if no, Joe, we need to eliminate the Obamacare portion of Medicaid, which puts at risk the Medicaid for vulnerable children. Again, we didn't have time to make that argument, so we just get attacked and we cower in our little corners. No, Obamacare is grotesque what it's doing in terms of risking the Medicaid for the vulnerable. For every dollar the federal government spends on traditional Medicaid for a disabled child, the states spend on that, the federal government kicks in $1.33. For every dollar the states spend on a single able-bodied working-age childless adult, the federal government kicks in $9, which has allowed the states to game the system and basically legally steal from the federal government and federal taxpayers. So we need to make those arguments. They're not necessarily easy to make, but it is grotesque what Obamacare has done to Medicaid. The downside, I guess, and the Journal kind of, and the Journal points out, Elon is, make me chase, just don't touch my subsidies. But they're saying that really he's joining the rest of the naysayers to try to sink the big, beautiful bill, which really doesn't, if that were to happen without something else happening, you would admit you wouldn't get the $1.5 trillion in cost cut. You wouldn't get the extension of the Trump tax cuts. The alternative, if you get nothing, is pretty bad. And, getting nothing is not acceptable. It's not acceptable. Again, it was just the wrong strategy to try and bundle it all to one big, complicated, difficult-to-pass bill. Focus on the areas of agreement. Do that now. Literally, I think we could get that done by July 4th. Focus on that. Again, take an automatic tax increase off the table, extend the debt ceiling into next year to keep pressure on the process. I mean, the president has to understand the debt ceiling gives him leverage to do what he said he wanted to do, balance the budget. Leave that out there. We're not going to default on our debt. We'll never default on our debt. We have more than enough revenue coming in to service our debt. We'll never default. This shouldn't freak anybody out. This is the scaremongering of the big spenders. So again, let's focus on reality. Let's discuss the numbers, and let's focus on our children and grandchildren whose futures are being mortgaged. Their prospects are being diminished by what we are doing to them and the fact that we're ignoring it. We're just simply ignoring it based on rhetoric and slogans. I'm interested in reality and substance.
I want to know what happens over the next couple of hours. You got your phone on mute right now? I don't, you may be getting, I don't know, where will the calls be coming from after this interview, you think, Senator?
Well, we're going to be meeting with the president in the White House, the Senate Finance Committee, so I'll be in that meeting. I had a very nice conversation with him on Monday. So again, I support him. I want to see him succeed.
I know, we all do. We all do, and I mean, a lot of people are nodding, but it seems like the train may have already left the station in the view of Speaker Johnson and Majority Leader Thune and the president himself. No?
No, they always told me that ship has sailed. I said, well, call it back to port. Because the ship that the one big beautiful Bill's on, that's the Titanic. It's going down.
Toothpaste in a tube, no way. Humpty Dumpty, Can't unscramble. And I mean, I have a lot of expressions for you. So
you can bring it back. You can call it back to
get
port.
The horse back in the barn.
Doable.
Okay, you can do that. Come here, Flicka. Okay, very good. Senator, thanks for all your time this morning, and very interesting. And we'll be right back with more. Thank you.
Walt Disney Studios chose T-Mobile for Business to help bring Lilo and Stitch to theaters this summer. T-Mobile's advanced 5G solutions connected remote production hubs, powering real-time collaboration.
I was tired of being told no. No to my dreams.
I had no idea if anyone would buy anything.
This is so wild that I actually, from a dream, started a business.
Talk about a pro's pro. Magnificent.
No catchphrase?
You got to bank through Chime to get a catchphrase.
Well, but...
Not now. My man is building his credit score with everyday purchases. Mama, there goes that man.
This is the one who keeps it moving. He stocks the right parts and knows just where to find them. Because this is about more than business. The industrial grade products you need. Call, click, or stop by. Grainger, for the ones who get it done.
I've never felt this way before.
If it feels right, go for it.
This is the last time. The last. OMG, where'd she get those? Better get those. DSW, a shoe for every you.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Our advanced matching helps find talented candidates so you can connect with them fast. Visit Indeed.com/hire.
Power E-Trade's easy-to-use tools make complex trading less complicated. Custom scans help you find new trading opportunities, while an earnings tool helps you plan your trades and stay on top of the market. E-Trade from Morgan Stanley.
Coming up, Gilman Hill's Jenny Harrington will help us find an opportunity in a market where she doesn't see big upside or big downside. That's next. Squawk Box will be right back.
Is a Bitcoin ETF the same as owning Bitcoin directly? While Bitcoin ETFs might offer a familiar face, they lack the true ownership and flexibility of directly investing in Bitcoin. With iTrust Capital, you can buy and sell real Bitcoin 24/7 with the tax advantages of an IRA. Real Bitcoin means no middleman, no restricted stock market hours. Choose the path of direct Bitcoin investment with iTrust Capital, because access equals opportunity. Invest in Bitcoin at itrustcapital.com today.
When logic bends, when certainties shatter, when left is right and right is left, which way do you turn? Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
It's a rough and tumble market. So at Federated Hermes, we put the stocks in our MDT portfolios through a ruthless vetting process, because no one wants an investment that cracks under pressure.
This thing is so good for your gut health.
I used to have a collagen, I used to have probiotic, a green juice. I replaced it all with this Arma colostrum.
My hair has gotten so much thicker ever since taking it.
Michael Jordan's the only guy who can compare in terms of confidence.
When you're Steph Curry, there's brand value there, there's brand awareness.
Curry Inc., the business of Stephen Curry, premieres tonight, 9 Eastern and Pacific, only on CNBC.
Looking for the coolest kids furniture? Nobody has more than Rooms to Go Kids. With the largest selection of bunk beds, bookcase beds, upholstered beds, day beds, and storage beds. There's more ways to stay organized, more ways to work, and more ways to play. Which means more ways to let your kids be kids. And of course, more ways to help you save big with our unbeatable prices. If you need kids furniture, nothing beats Rooms to Go Kids.
Let's talk markets and some stocks to watch with Jenny Harrington, CEO and portfolio manager at Gilman Hill Asset Management, as well as a CNBC contributor, author of a new book, Dividend Investing, Dependable Income to Navigate All Market Environments. I was going to ask you about the overall snapback in the S&P. Do we go to new highs? Doesn't this market seem like it wants to go up? And but everybody's looking for a possible test of the recent lows. Sounds just like 2023 and 2022 is what it sounds like to me.
You know,
you're going to hide behind individual stocks. That's what I would do if I were you.
I think.
Do you have an overall market outlook?
Well, I always do.
And?
But you need to consider the source, right? I'm a dividend income manager. I'm always going to be apprehensive and cynical, which is why I like buying dividend stocks. So I'm always apprehensive. I'm always cynical. I'm also always all invested. But right now, you know, yesterday I spent the day at NAREIT, the National Association of Real Estate Investment Trust Conference. And even within that, you're looking at like the healthcare REITs. And you don't want to buy all the healthcare REITs. You want to buy two.
Some of them.
You know, within the semis. You don't want to buy all the semis. You want to buy one or two. So you're right. I am hiding behind individual stocks. And I don't know if it's hiding behind or it's just things are changing and it's the time for active management. But when you ask me about my overall view on the market, I don't really see how we go up much more from here. And that doesn't mean I'm wildly bullish. But I listened. Oh, yeah, sorry, bearish, thanks. I always say the wrong thing.
Yeah.
But I was listening to your interview with Nick Timmerose. How many times did he say, I don't know, we don't know, there's no way to tell?
Is it ever not like that, or is it worse now?
I feel like it's a little, I don't know if the right word is worse, but it's more I don't know right now. And then Dr. Richardson, who you had on before, you know, hiring starting to show cracks. When you have those, how do you get past a 21, 22 times multiple? I don't know.
We're already, for a while, it looked pretty good. What did we get down to, 20 or 19?
19-ish, yeah. Maybe even 18 and change. So that's when I start to feel good, when the multiple's great. But then on the flip side, I don't really see what derails it. You know, I think earnings were good. Companies are doing well. The consumer is continuing to spend. So I don't see this nasty bear case.
Is this number that we're looking at, though, does that assume that the tariffs are going to be taken down substantially? That there will be agreements that are...
Are we de-escalating?
Are we inured? are we inert? And we're just saying,
are
who
we
knows?
assuming that these, that the next 90 days doesn't come and you're dealing with 145%?
Yeah, I think it has to assume that it's nothing near the worst case scenario.
Right.
And it shouldn't be. That doesn't make any economic sense. It doesn't make any logical sense. Nobody wins. When I was in business school, we took this negotiations class, and they would talk about BATNA. It's a goofy thing. It's a better alternative to a negotiated agreement. But it basically makes you think about both sides.
Let's go.
And where both sides are coming from. And
Thank
what's the
you
best
very
outcome
much.
for both sides. The best outcome for both sides is not 50% and 145% tariffs.
What are you buying today?
God bless you.
Okay, I'll give you a couple ones. I
My
really love
name
Ryman Hospitality
is
Properties.
Trader
It's got a 4.5% yield.
007.
Trades at about 13 times earnings. There's no tariff consequence. If a terrible recession were triggered, they're still fine. They own non-gaming conference centers and resorts, totally domestic. I like that.
All right, RHP.
Yeah. Another one, this is kind of funky. It's in our international strategy, but it's KB Bank. KB Bank is like the JP Morgan of South Korea. Trades at 6 times earnings, has a 5% yield. That economy is booming. I think you can buy these. And by the way, there's no tariff exposure there either because it's all focused in Korea. So yeah, so I like things that are out of the limelight. I like things where if we are in kind of a low return environment, that big dividend yield gives you at least some part of the return being very, very highly certain.
And it might be supportive as well. We would have gotten 3, but
I can go all day. You want like 30?
Yeah, no, we'll do that. We'll do that next time we come back. But we've got to be out of here in about 20 seconds, I think. But Jenny, thank you.
Thanks for having me.
Okay.
It's good to see you. Let's take a very quick look. Actually, markets are back in the green, barely. Dow futures up by about 6 points. S&P futures up by 3. The NASDAQ up by 11. We do have that big jobs report on Friday. And after the ADP numbers today, we'll be watching ever so closely.
Might not be so big after the ADP.
We shall see. Anyway, we'll be right back here tomorrow. Join us then. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanillo with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. We've lost some of the pre-market gain as ADP employment comes in the weakest in 2 years. Smaller businesses cutting jobs on a net basis. Plenty of data on deck today as those aluminum and steel tariffs kick in. Our roadmap begins with a stalemate in trade talks. The president says that she is, quote, extremely hard to make a deal with. Elon Musk blasting that tax bill, calling it a, quote, disgusting abomination. We'll talk about the fallout. And a big milestone for Wells Fargo. The Fed finally lifting the asset cap. Charlie Sharp is with us here at Post 9 exclusively in a few moments to talk about what it means for the company's growth. Let's begin, though, with trade tensions between the United States and China. Overnight, the president posted on Truth Social, quote, I like President Xi of China, always have and always will, but he is very tough and extremely hard to make a deal with. We still, Jim, don't have confirmation from the Chinese side that they will
I know
talk
people
on
have
And
been
without
following,
a call,
some of you may
run
be
the
following
risk
me
of saying,
on
okay,
X.
we thought it might be the weekend. We thought it might be Wednesday. We don't know if it's going to be Friday. It's hanging over us. Also, is this story that we keep hearing about the magnets, including an incredible thing about the idea in the journal that maybe we have to go back and make motors there. It is a level of hardball that I think really tests Trump. I think he likes it. I think he likes it. And I think that this is the sign that he does like it, because he would keep quiet if he didn't feel like this wasn't the kind of negotiation that he used to make with banks. And I think, I'm not saying she met his match, because she can take an incredible amount of pain because he lives in a totalitarian environment. But this will be incredibly interesting. And it's the rare earth versus some of these plastics. It's the idea of who's hostage versus the idea that Trump wants to embargo them. I think he wants to put it's embargo versus we need these certain products. I think it's going to be exciting. I think the market's going to hate it, because I think it's going to be up and down. We're going to come every day, and there's going to be a Truth Social, and we're going to be so destabilized. Look, people feel that the ADP is what knocked us down. I also think the idea that posting knocked us down.
Sure. Big piece in the Times on page 1, looking at jet engines, for example. You can't make it without China.
No,
the industry actually put a letter out yesterday talking about components for aircraft and defense. They rely heavily on the materials you're talking about, Jim, but we're 3% from all-time highs.
I know. Well, Kelly Ortberg would tell you, the CEO of Boeing, that they need the planes more than anyone else in the world. The Chinese have travel problems. They can't go where they want to go, and that's a chit. I mean, everything's a chit. When you read Dollar Tree's earnings, I mean, that place is just one big chit. I mean, they need their stuff. Now, of course, obviously, you don't have to go to Dollar Tree. You can go to Costco. But I just think everything's on the line because it turns out that now we've had a lot of quarters. And, boy, there's a huge amount of China at every company I've dealt with.
Sure, yeah.
Just everywhere.
Yeah. There's a piece on the tape this morning that China's weighing buying hundreds of airplanes from Airbus, and that Macron may go to China in July to celebrate 50 years of diplomatic relations.
As Airbus can tell you, they have fewer planes than Boeing. There's nothing. That's just a bluff. That's a plain-out bluff.
I mean, it's. Right. You call it a bluff if you like.
Right. But I mean, if that was on the phone call with his buddy pal friend Xi, I think that Trump would say, look, there's no real need to talk if that's what you're going to come at me with. Now, Macron going there 50 years, that does sound like an embargo is not going to work. Europe likes China. They need that market. I think we're very much alone when it comes to what we want to do. Maybe Korea, maybe Japan.
Right.
But that's historical.
Meantime, Jim, you're right. We're dealing with the China side. Meanwhile, the EU rep this morning says the steel tariffs were a surprise. It does make talks more difficult. They told that to Greer in Paris. And with this FT piece, it's going to be tough talks on trade, tough talks on NATO, tough talks on Ukraine, which the Times today argues Europe's more convinced they can handle that by themselves if they have to.
The amount of money they're spending on NATO is driving their entire stock market up. I mean, I go in this morning at 3:30, and there's that, it's looking like Germany's going to be up, and then it follows. I'm like, gosh,
movie live, right? So if you look at one of the biggest firms
Poland's
out
up
there,
40% for the year.
Poland's fabulous. It's a Poland spring over there, man. I've got to tell you that this European market, and now David's not going to make fun of me because David's not here, but the Spanish market is so great. You know, people are scrambling to find stocks. You just have to buy the VGK. There's just not enough stocks. Rhine Metal, I mean, there's a couple of German stocks that are up like 200%. But they've changed. They've gotten a level of religion about spending that's just incredible. I think a lot of it's NATO. Right. They know the consequences of a Russian win. Poland certainly knows the consequences of a Russian win. How do we know that Poland doesn't have ambition? I mean, that Russia doesn't have ambitions for Poland? We don't know. We don't know. Okay, it's a democracy, it's NATO, but look, there's just the history of Russia is to say that Poland doesn't exist. Why would Putin disagree with the history of Russia?
A lot of game theory about what his ambitions may be beyond Ukraine. You're absolutely right. Meanwhile, Wells Fargo, big story today. Up in the pre-market, the Fed has finally lifted that nearly $2 trillion asset cap on the bank. It was imposed 7 years ago in response to the company's fake account scandal. Removal of the cap does end the limits on the company's growth, and we're going to talk to Charlie Scharf in a few moments, Jim, about what areas they're excited about growing in.
I think this is so exciting. This is the third largest bank. Charlie Scharf has tremendous ambitions. He has been just crimped like you wouldn't believe. I mean, these banks, before this cap, these banks were all kind of clustered. Since this cap, oh my, Wells has fallen so far behind. Plus, they spent a fortune on regulation, on compliance. I just have to tell you, I think this is a watershed moment. Now you can say, well, like some of the analysts who are short-sighted, well, that's why it's going up. And no, I mean, it'd be a fundamental change. I think Charlie is going to go for J.P. Morgan, where he worked. Worked for a long time.
On the commercial banking side, on the credit card side?
Commercial credit card. Now, remember, he had to cut back on corporate because that's how he kept it within the cap, and he went with the much, I'd say, sticky retail. But look, Charlie is I find him to be one of the most competitive people I have ever met. You've got to put him in a camp which just says, I've been waiting to take this bank and turbocharge it, and all that's happened is I've been playing with shackles. The shackles are off, and this Prometheus is unbound.
Meanwhile, we've gotten some updates in the last couple of weeks about, say, the amount of headcount reduction they've done since 19, when Charlie came along.
No, Charlie has been, I think people don't realize he's better at tech than people did. Remember, he went to Visa, that was a tech place. Back in New York was a tech place, but they were blocked on acquisitions. They had a regulatory shadow where you could not get, so there's a lot of people who wouldn't deal with it. He has said this is not like turning on a light switch, but at the same time, this is going to be a bank that if I were Jamie, of course, Jamie's up there with Jensen. It's kind of annoying after a while. If I were Jamie, I would say, you know what? I totally dismiss him, even though he was the head of consumer from 2004 to 2012, and his dismissal amounts to saying to everybody else, oh, I guess he's gunning for us. That's kind of dismissal.
When we come back, a rare interview exclusive with Wells Fargo's Charlie Scharf right here at Post 9. Don't go away.
It all started with a small business idea.
It's a pillow with a speaker in it. That's right, Craig.
Pulling in the perfect team to get the job done.
I'm just here for the internet. AT&T, it's super fast.
You locked us out?
And when we were thrown a curveball, we had everything we needed.
Is the internet out? Don't worry, we have AT&T internet backup.
The next level network for small business.
I sold a pillow.
Pedro's parents planned for adventure, but they didn't plan for him to make a new best friend. You were made to get more than you bargained for. We were made to help you save on packages. Expedia, made to travel.
The grind catches up with everyone, even me. That's why I trust Cunol Ultra High Absorption Turmeric to support my joint health. It's the #1 doctor-recommended form of turmeric that helps you keep doing the things you love at every age. Cunol, the brand I trust.
Michael Jordan's the only guy who can compare in terms of confidence.
When you're Steph Curry, there's brand value there, there's brand awareness.
I wanted to create my own entity to build true value.
What do you want your legacy to be?
Curry Inc., the business of Stephen Curry, premieres tonight, 9 Eastern and Pacific, only on CNBC.
Dear Texas, at HEB, we partner with farmers around the world to bring you Cafe Au Lait, made from 100% Arabica beans. And from the world's finest coffee beans, we create blends in over 40 different flavors that Texans love. From whole and ground beans to single-serve cups, iced coffee, and cold brew. No matter how you drink your coffee, every time you take a sip, you'll know it was grown just for you. Cafe Au Lait, sourced around the world, brought to Texas with love from HEB.
Carl, now this is exciting. We got the Federal Reserve lifting Wells Fargo's $2 trillion asset cap. Of course, that was penalty resulting from the bank's fake account scandal that had nothing to do with the man to my left. Let it get clear, 2019 versus previous. Wells Fargo calling it a pivotal milestone. Joining us exclusively here at Post 9, Wells Fargo CEO Charlie Scharf. Charlie, first, I'm going to wish you congratulations.
Thank you very much. I appreciate it. But please wish everyone at Wells Fargo congratulations, because this really was a whole team effort.
Because
for a long time.
You gave them all $2,000.
We did. We gave an equity award to every employee in the company, whether you're a teller, you're an operations person, trader, bank, or whatever. And what we wanted to make sure people understood is that they all had something to do with it. We wanted them to be thinking about the company going forward and hopefully sharing the upside. But it really was a team effort, and there's no better way to show that to people.
A lot of people have asked me during this period, like, what was happening and what's different now that the cap is off?
Well, honestly, yesterday versus today, the only thing that's different is the perception of Wells Fargo, which is incredibly important because we've always been perceived as being in the penalty box, being behind the 8 ball in terms of what we can do. And until our regulators actually did the work and said they are a different company, it's just me talking, and that means far less than they do. But the reality is, going forward, as time evolves and as the world evolves, we have the opportunity to expand in ways in a very methodical way, built on the processes that we built. But think about ideas and expand in ways that we wouldn't have been able to do it when the cap still existed.
Well, let's go there. What was the effect of not being able to grow versus the 2018 deposits when it was $1.4 trillion for JP Morgan and you were 1.2? I think there's a disparity. And what does that disparity mean for you now?
Well, listen, and I want to be really clear, which is when we look back at what happened, the things that we did were very wrong, and we can argue about how long it took, but things had to get fixed. So I'm not going to be complaining about what the impact was. But when you look back over a period of time, people have done different estimates. I think there's an estimate in the Journal today where they think that we probably turned away $400 billion in deposits over this time period, just based on market growth. And based upon the things that we've seen, we would agree with something like that, let alone if we were able to invest and try and actually take some share from some of the others, like some of our competitors have done. That number could even have been higher. And it's not just the deposits. Once you have the deposits, it's the ability to provide advice, provide investment services. If it's a corporate, it's the ability to help them access public markets. It really is relationship-based in terms of how you think about deposits. Hugely significant, and now we have the ability to compete differently going forward.
Do you think it was punitive beyond the actual reason for the penalty back then?
I think that when you look at what the regulators said we did wrong, no question they were right. It's always hard to, listen, I wasn't there, it's always hard to look back and say, does the punishment fit the crime? But there's no doubt that significant action needed to be taken because of the things that we had done and the fact that we weren't making the kind of progress that we're expected to make. And so the reality is the regulators have been extremely tough on us, extremely direct, and I think appropriately so. I really have no issue with that. And when we look at what's been accomplished, it wouldn't have been accomplished if they hadn't given us the orders, if they hadn't been tough on us, if they hadn't forced the management and board changes that they forced, quite frankly. And so all those things come together to create a sense of urgency, the license to bring in a new team and to focus on these things in a very different way. Was the exact punishment, was the asset cap the right answer, or could it have been something else? It doesn't matter at this point.
What are you going to do with all the people who were involved in compliance? What are you going to do with the money you'll save compliance? Please do not answer that nothing will change, because that would be ridiculous.
No, I think, but it is important to understand we built a lot of things that didn't exist. So a lot of the disciplines that are embedded in the company have to continue. And we're completely committed to making sure that happens. That is what running the company with the appropriate risks mindset means. That's what I mean when I say building on the processes and culture that we built. But the fact is, these have been a bunch of big projects to get a lot of work done. We've had a lot of people, a lot of outside resources dedicated to that. And when we put together, the work from, these 14 consent orders, it's not always done as efficiently as you can because time matters. So we do have the opportunity over a period of time to be more efficient in how we do it. And quite frankly, it'll make it actually better controlled because we're thinking about it now holistically with the right kind of foundation. So yeah, there are efficiencies to come. We have lots of opportunities to become more efficient away from this work. So all in due time.
All right, so Charlie, you came in 2019. How many consent decrees did you think you needed when you took over?
Well, I knew the number of consent orders that were public. I knew what was required by reading the orders. What I didn't know is where we stood on all of that work. And yeah, I was very surprised at the fact that we hadn't made more progress on that work, that we didn't have all the right disciplines in place. I've talked about the fact that I think one of the most important things I've done, in addition to bringing in people that could actually get this work done to complement the people that were there, was making clear it's our top priority. So when we think about what was surprising, the numbers of orders weren't surprising, but where we were and how much work was still in front of us, I expected it to be a lot, but no question more than I would have expected.
You mentioned the perception of Wells changing today. Yeah. Is it the kind of environment where you can afford to come out sort of guns blazing on growth? Or do you still need to be sensitive to those who maybe wish the asset cap would last?
Well, I think about in terms of what the right thing to do is for the company and for our shareholders and our communities, which is, first of all, this is not the kind of environment where you're going to go out guns blazing on anything. I think about it in terms of, what are the business opportunities and what's the smart way to go about growing. And so what I've said is there's no light switch that's going to go off today versus yesterday, that we look at things in terms of our opportunities are much more linear in terms of how we'll grow and our level of aggressiveness as opposed to exponential. But remember, yesterday, that was a line that was flat. We weren't able to actually grow linearly, and now we can. So the other thing which I think people don't totally appreciate is the amount of effort that the management teams put into this. This took up huge amounts of our time. I've said publicly that I probably spend 2/3 of my time doing this work. Appropriately so, by the way, because it is the most important thing. But as we complete the work, as we get these things behind us, embedding it in the culture and continuing it requires a different level of work, not just for me, but the management team. And so that means we can focus on doing more to help customers, growing, and figuring out where the world is going and how we're going to participate in that.
Now, Charlie, I know you as a pretty competitive guy, but you've been playing with one hand tied behind your back. I call you Prometheus, and you are now unbound. You fell quite behind in terms of deposits to J.P. Morgan. You worked at J.P. Morgan. Wouldn't it be great to take on J.P. Morgan in every single element and start winning?
Listen, I've got a huge amount of respect for them, Bank of America, Morgan Stanley, Goldman, Citi, all the people we compete with. What we're excited about is that we have what we think is one of the few truly differentiated consumer and business franchises in the U.S. When you look at the scale that we have, when we look at the quality of the brand, even after all that we've been through, our ability to invest, the depth that we can go down in terms of the offering amongst a broad set of consumers and businesses, the way we can cut across the different product set, really hard for a lot of people to compete with us, but we welcome the competition. But we believe that ultimately what's going to help us be successful is that we can create more value for our customers than other people we compete with. And so do I want to be better than all those people? Absolutely. But listen, they've been at this for 10 or 15 years. Done a great job.
Good morning.
For all of us to actually do a better job for our customers.
Oh, you're long? Nice. Looks like it's gonna pump at open, so we might get 800 soon. I'm just waiting on the bot.
Just fix the place. We didn't just get the consent orders behind us and get rid of the asset cap, but look at that is an amazing.
Yeah, it's still short since last night.
And you see it in our market shares, you see it in our profitability, you see it in terms of
maybe maybe we'll dump at open. Last 2 days we've been pumping at open, so we'll see.
It's up to us to deliver, but absolutely this franchise.
I do want to short at 800. What's up, buddy?
Getting some incredible talent from other places, particularly people who were not able to become CEOs because there were other people in the way of them.
Yeah, it's shorted like at 9 o'clock last night, so don't follow the bot anymore.
I'm incredibly lucky to have attracted the kind of people that we've attracted. And by the way, I would say kept so many of the great people at Wells who didn't create the problems that existed here.
Oh, yeah. 8 minutes?
And it goes back to this point of having the right team in place. Like, people talk about me. I've read a lot of things about it. It's not about me. Again, the most important thing that I've done is bringing those people, set the standards, set the disciplines in place, but it relies on all those people, the people that work for them. And so we're incredibly lucky to have attracted new people, Fernando Rivas.
See, you look at the 15 minutes, it looks like it might go down on the oscillator, but 3 minutes is going up, so I hope the bot doesn't go long and get screwed over.
These people, I think, are the best in the business.
Yeah, 15 minutes looks bad, but I don't know. We'll see. I'm just gonna follow the bot when it goes wrong.
5 years after that they've been about what's been in front of us. But I would put this team up against any team out there.
Is the one macro question.
So we got Tradeify and Bonux giveaway later today on the stream.
Is it shifting in a way that'll make this transition easier?
So get your points in.
Well, two different questions. Number one is what we're seeing in the market, in the environment versus what it means for us. The only thing it really means for us is
The $200 you don't need points. That's just for the special people.
More positive results because we are dependent on the health of the U.S. We are a U.S. company. 95% of our
Don't
revenues
spam,
are in
dude.
the U.S. We do well with the U.S. as well. And so we're rooting for everything the administration and Congress is doing. We want them to get it right. If they get it right, that'll make our lives a whole lot easier. If not,
You still long? That's a good long.
But it doesn't change the opportunity we have and the investments we're going to make because we have this franchise that's been underinvested in for the reasons
I
that we
think that's
talked about.
bot going long. Hold on.
Not for just next year or the year after that.
No, that's ES.
10 years, 15
Yeah.
years.
Enkyo's still short. That's weird.
You mentioned the administration in that sense. I want to go there. President Biden this morning he posted about his friend President Xi. If the president were to post about you, would you be a friend?
That guy that's
Would I be a friend or what?
The president.
telling you what the hell you're doing.
I mean, you're the domestic bank. You're not putting up banks in China.
Let me see the NQ bot. NQ might go long next and
Extremely interested in
maybe
what
next
business
candle.
thinks, what banks of all sizes thinks. They're very actively engaged in talking to the business community broadly. And listen, we want, we think we're pivotal to helping bring economic growth because of 4,000 branches. We bank small businesses, middle market companies. It's not just the big
Bot took one play last night. I mean yesterday and got like 400 points.
They want to be helpful in that. Contrary to what other people might say, I haven't heard anything that would suggest that they want to reduce regulation or reduce oversight in a way that would jeopardize safety and
5
soundness. But they do want to strike the right balance between how do you ensure safety and soundness, but put institutions like Wells Fargo in a position to actually help the domestic agenda, which is help the United States grow.
I'm sorry. Have you at least talked to Senator Warren or others who have been seen as industry watchdogs or critics?
Listen, I try and talk to everyone on both sides of the aisle. And by the way, I understand criticisms that people have had about us in the past. In fact, I would agree with many of the criticisms. What I hope is that they would look at the work that's been completed, the independent work done by the regulators, again, the majority of which, and the conclusions likely reached under a Democratic administration, and say,
What happened?
this is the way it should work. The regulators actually at this point should be congratulated for driving the fix. I mean, I and the management.
Oh yeah. How much was it?
They're the ones that drove this and were the ones that oversaw this and made sure
Yeah,
that
never mind. Hard pass. I can't do that.
So I hope that's the way they look at it. I'm sure that there are things that people will always look at and say we can do better, and we're not perfect. We haven't been perfect even after I got there, but we have 215,000 people that come in every day that I really believe want to do the right thing. Are incredibly proud to work at Wells Fargo, and I'm incredibly proud to work with them.
You have retired a huge number of shares. I don't think people realize how much stock you bought in. At the same time, now you have a lot of things you want to do. Isn't it better to slow the buyback and give us some earnings power?
Yeah, I think we have more options in terms of what to do with capital now than we had
4 minutes, gang.
because we were limited because we couldn't grow the company and create excess capital that we could then invest in the balance sheet. So yeah, we have more choices. And so our first choice will be to invest in things that are important strategically, that build the franchise over a longer term. We're still going to have, over a period of time, likely plenty of capital, either to, we want to increase the dividend.
I think we do. We have ISM at 10, so 30 minutes.
But we are excited about the ability to invest more inside the company. But it's not an either or. But obviously the mix will change because one was forced to be zero and it had to go to the other bucket.
Well, I read your note to employees, excellent. But where I'm looking for is, did you give any direction in the last 24 hours or whenever the government let you know to the different branch heads to say, listen, you're unleashed. Let's go get corporate money. We've been limited to retail. It's time.
Well, first of all, I mean, the past 24 hours, again, our regulators give you some kind of indications, but nothing's done until it's done. So, and we certainly wouldn't have communicated anything before 4 o'clock yesterday. There's been a lot of conversation. There's been some celebration inside, which I think is entirely justified. But then a recommitment to what we do going forward. So those conversations will happen. But I've been getting questions internally as I have externally of what happens when the asset cap gets lifted. I'm saying the same thing internally that I say externally, which is we have a huge amount of opportunities.
What?
But it's not like we go from one company one day to all of a sudden huge increases the balance sheet. It's where's the customer need? What can we be doing to facilitate business out there for customers? And think of it more linearly.
I think so. But I don't. Yeah, kind of.
The benefits will come over a period of time.
Although Jim and I were talking about silos for growth, whether it's commercial banking or credit cards or wealth management. Is there one that viewers should be thinking about the most?
No. And part of it is, I really believe this, by the way, that this is.
All right. 1
when I got
minute.
to the company, we had the opportunity to look at everything and say what fits and what doesn't fit. We sold a lot of businesses, good business, asset management business, but just didn't belong at Wells Fargo. We downsized the mortgage business significantly, and so what we're left
It's
with
already
are
going.
things that we all
Shit.
think are incredibly important to being able to serve consumers and businesses. And I honestly believe, with the exception of the mortgage business, all have the opportunity to grow, both in terms of returns and in terms of rate of growth. And we have a little bit of a head start in the card business because we identified that as something strategically important early. We identified it early on in the corporate investment bank because they didn't have the same overhang as some of the consumer businesses, so we're able to move more swiftly and hire the 75 managing directors and focus on that.
If it hit 854, I might short.
Every one of the
800 for sure is going to hit today.
grow intelligently, to grow based upon the lessons we've learned in the past. All right, well, one last question. I know you as a husband. I know you as
That's a weak open. It's trying.
We get the opening bell here at the New York Stock Exchange. We had a look at the CNBC real-time exchange. Jim, we were talking about yesterday's, again, pattern of opening with a mild bid.
It wants to pump, but yeah. Hope it dipped. How long did it dip?
This is kind of like irrelevant right now. I'm more focused on Bitcoin. What a great time to be able to lob something about it's time for Europe to pay the piper. I mean, it's really time. Come on, he's got to do that. It's not fun. Is he going to sit there, watch our opening, and say, why don't those guys realize that I'm in charge, not the market? Give me a break. This is his time.
I don't think Charlie's not going to stay for the whole hour. That's smart. We'll watch. We did get a little bit on that ADP number, Jim, which obviously the read-through on ADP has been checkered in the past, but 30 plus K, we're looking for 110.
Look, I mean, yeah, this was a too late pal moment. I think Jay Powell's fabulous, the Federal Reserve Chairman. I don't like a situation where he has a shotgun to his head. I do think if we get an employment
Dude,
number,
we're just chopping now. It's not like yesterday.
The president did post after the number saying, once again, calling him a too late pal.
Yeah.
Must lower the rate.
30 minutes, we got data.
To your point about having a gun to your head.
The man's a public servant. I think he could have been good for $10 million each year. I think he's a terrific guy. I've known him for a very long time. And the insults don't work for me. The too late pal. I mean, we grew up in houses where we had moms, and our moms would wash. I mean, my mom had ivory soap because she didn't believe
Let's see
in
Fish's
and I
level.
would be just chugging ivory soap right now if I wrote stuff like that. Look, someone who's
832.
Friday if the number is weak.
I think I would say, listen, maybe it's time to reevaluate. Do you really think that inflation is that bad? I mean, we had a number of notes today which indicate that there are enough companies that are trying to fight the whatever they can do in favor. We don't know the tariff shit, but this is a moment to say, to be a little more holistic about as a president, say, you know, Mr. Powell, I'm going with the Mr. Powell.
Yes.
Because it's
Guess we
kind
just
of
wait for
thing that
data
I think,
first.
Mr. Powell, we've done a lot to be able to bring things under control. We've got a bill we got to pass. We have our so-called allies. They're coming to the table. I really think this is time to show that we are all on board and that we row together. A row together touch right now on Truth Social would go a lot more than the name coin.
Right. Having Charlie has now vacated the set, our thanks to him. But thoughts about that shot?
Look, I think that it is Charlie. This is American back, and I didn't hear from him that things are troubled. I did hear from him that he himself is bang. I think he's like competitive guy was going to go after JP Morgan, even though he didn't say point blank. But no, I didn't hear that things were weak. He did not make the case for the president. He more made
I don't have YM data, so I can't see it.
Would you argue it's your favorite trade within financials?
Oh, is a bot long on YM? Let me see. Fish.
You have been positive.
No, it looks like his bot is off.
System. They can come in under American Express, under MasterCard, under Visa, where Charlie worked. They have a very low multiple, and they can do a buyback starting in July that is humongous. Charlie did retire a lot of stock, and I think this is great. I think the price targets of 85 are realistic, but I think people are really underestimating the earnings power of Richard Fairbank and Capital One. He is another competitive fellow. I think people realize his bankers, they're not like it's kind of like Scott Fitzgerald. They're not like
you and me. Yes. You do have
Yeah, bot's gone long on the next candle if it stays this way.
There's 3 firms that downgraded. There are 8 that understood. There are 8 that understood what really went on, and they raised the price target.
Oh, I'm scared if the bot goes long.
They can say, look, there's a real problem. They don't understand the accounting, the annual revenue accounting. They don't understand the so-called gap. That will be solved next quarter. George Kurtz had a monster quarter, and anybody who disagrees with that, why don't they tune in tonight and learn?
Yeah, it's still short, but it's gonna go long next candle.
What do they want? I mean, what do they think it's opted? The light topic him very well, but he was not happy about the future. No, did he do a Z-scaler? No, he didn't do a Z. Down 39? Will you stop?
Canaccord does cut. You're right. Evercore goes to inline. But, 440, 475.
The stock was at 400 a couple weeks ago. But, you're selling George right now before the
I gotta wait for the candle to end, and it's gonna go long.
Look, a glitch. It was not a hack. I remember getting a call Friday morning. I had the day off, 6 o'clock.
Oh, fuck, I read the wrong one. Oops.
George, he said, you're going to work today.
Kind of get out of this one. Wrong account.
When you really finally wake up from your slumber, you're going to want to do work. What did he do? He came on our show for 20 minutes. He wanted everybody to know. Well, these
There you go.
people
Bot went long at 7:54.
Yes, he is.
I mean, the person is he winning Crowdstrike. The guy is the #1 long-distance driver in the world. That's who George could talk about.
What's interesting, Jim, is the overall backdrop for tech is pretty good with HPE leading.
Okay, HPE.
ST Micro with some pretty bullish comments.
Yeah, and that's amazing. HPE, it's not just because Elliott has 1.5 billion. I think that Erie's back. Now, I remember when I was at the GTC, which is the festival that's all things.
I don't think the bot knows about the data, so I'll just wait.
It was very, very exciting. But don't forget, Dell had the product, and Dell got killed, and then it's come back. He got killed because of I felt just because of tariffs. I think Dell's the better buy. NVIDIA's struggling with this 143 level.
Although, it's once again, the most valuable company, overtaking first time since January.
Well, I mean, look, I think that he was hoping that there would be, and he said, look, the president has a plan. And the president, I'm sure, does have a plan. In the meantime, I'm watching Broadcom. Now, this is the quiet $1 trillion company going up and up and up. That's Hawk Tan, another person. I mean, I love to regard these people as competitors. I want people at home to know that Hawk Tan is not sitting there saying, how are we doing? He's saying, I want to be #1. So is Kurtz. He wants to be #1. And Jensen, he is a quiet #1. He is, but boy, is he competitive.
Meantime, Jim got an upgrade of Snow over at UBS. Citi, Western Dig, positive catalyst, a bunch of positive.
Yeah, Western Dig is a very cheap stock. Snowflake just the opposite, but
That's up, what, 20 points now?
And that was a monster quarter. It was probably the best year-over-year quarter that I've seen. And these people are
I
jumping.
should have followed the bot. It's fucking data.
30
points on the bot.
But all these
Yeah.
filling that gap. In fact, S&P semi-index highest since January. You got over 40% of the index back above the 200-day. And that's getting a little better.
Yeah, and even the Internet of Things stocks, which have been really lagging, came on yesterday. Texas
So you got another payout every day? Nice.
was great. This is a group move that is surprising people.
Hey, 250 is a lot in the Philippines.
You can play catch up in this moment. If Nvidia can break the 45, there will be.
What up, Gambit? Did you take long on the bot, Gambit? I didn't. I did not because I was waiting on the data that's coming out. Yeah, that's a good freaking 30 points.
And it didn't take the hill, and then it was thrown back. And now I think
Yeah.
at 32 times earnings, you got to give Jensen the
I'm gonna wait for data. If it dips, I'm gonna go
Maybe the
long.
only sort of not entirely positive note today is this downgrade of Apple over at Needham.
Yeah.
Martin goes to hold. She talks a bit about risks to earnings, competition, valuation.
The only thing is, I mean, right now it's up, but that was one of those downgrades which talked about the historic PE versus now.
Right.
I found it somewhat compelling. I did not sniff at it and say,
Good work,
I
D.
don't know what's happening.
Nice shit.
I did say that there is a PE problem at 28 times earnings. It's historically lower. And yes, everyone knows and understands that we're not getting enough AI. And Siri is kind of flip phone, Siri's flip phone. The conversations with Siri are clipped and meaningless.
Right.
I had a conversation with Perplexity that blew me away.
Axios today has a whole, they rank sort of all the platforms, and they go through Claude and ChatGPT, and you're right, they mention sort of Apple as an afterthought, and by the way, Apple's trying their best, but...
They are trying their best, but sometimes, as Parcell said, I don't care if you're trying the best. It's about whether you're doing the best.
Yeah. Oh, 9:30.
Apple,
So we have two data.
in terms of trying to make a deal, they should make a deal with Perplexity.
Let me see at 9. That's only 9. This ISM is one of the bots telling me.
I was a Brock aficionado.
Yes.
Next couple of days, Brock's led me wrong.
Yeah.
ChatGPT is
So after the red, I might long. Looks like it's going to dip.
Perplexity because it's just the facts man that's got a drag that attitude. Brock doesn't know me as well to be that informal with me. I mean, come on. I've never even been
Do you think it's going to be a dynamic where users kind of switch around like radio stations?
Meta, if you want to know, you have a tremendous knowledge of dance and song and plays and books. And that's Meta's world.
So you think it'll be like channels?
Exactly. When I go into Meta, I go in and I say, look, I don't want to waste my time with this book. And I don't like to be halfway through a book. And Meta will give me a real sense. I mean, right now there's a Sondheim show on, right? Well, I go to Meta and say, listen, is this like the last Sondheim revival? I mean, what's the story? It's kind of the People magazine. By the way, People magazine's a good follow.
Yeah.
Not everything has to be substance in our world.
Dollar Tree Jim suffering a bit, not from the full year, which is reiterated, but it's the Q2 adjusted guidance down as much as 45 to 50.
I'm bored. I want to short for data. I think I might. Yeah, I'm going to short just for the data. I'm short at 86. Get out at 80.
Orders submitted. Feeling insecure. And one of the key things about the Dollar General was they talked about trade-in, which when you grok it or claude it, Perplexity says that means there are people who are somewhat wealthy, middle, that are going to Dollar General. But this was when I first discovered about Costco. And you go and it's just all Mercedes and Land Rovers and the lot because they want to bargain too. I don't find Dollar General as compelling, but it does have a kind of warehouse feel. Dollar Tree's in the midst of a major reorganization with the much I think faltering Family Dollar. I need people to watch NVIDIA today. I just
Everybody short. There we go. Yeah. I got enough on my funded futures now, so I'm done with that. Yeah, I got the 6 points for MNQ.
I was with someone last night who brought in was talking about
payout soon.
pounds here, and save a quick bill. And it may be because I always ask
Me and you,
everybody
Gambit, we're getting paid tonight.
I'll know what kind of day today. If CoreWeave's down, because CoreWeave is perhaps one of the greatest short stories.
Appreciate coffee.
This is a wall we built looking at some 52-week highs yesterday.
I'm gonna short again if it goes up.
The Netflix and GE Aerospace, for example, Vernova's been putting them up pretty recently.
Yeah,
Block it out.
I think when you look at Vernova, they were the survivor. Constellation was thrown back. Constellation was up huge at one point. Well, keep that down.
Yeah, we got actually a downgrade over at City as they go to neutral.
How do you like that? That's heresy.
Damn, look at the drop, dude. Oh man, I got out too early.
See, this is not the kind of day you want. The people who glom on the stocks a day like today, you have to realize that these stocks get up a lot. And if you're going to go that way, just go by bounce right down 50, because then you really have, you got a little club taken out. Right. I don't like this kind of opening.
Well,
it was ill-considered.
We're waiting on a potential call between the presidency on Friday. Got a jobs number. Next week is WWDC. And then Robotaxi launch for Tesla, Jim.
And then you had that video, a Tesla video.
Yes. Big C's looking at the
disquieting.
The Arizona fatal accident, which kind of launched this federal probe. By the way, the European sales continue to roll in pretty weak. UK down 45, Germany down 36.
It is. I remember when I was talking with the GM people during that period when Kyle Boat was there, and it is just so unfair that when
Let's hope it drop, then we can long.
With all the fatalities that we get from humans through sleeping, through drunk, and it's just not right. But it has been used against them for a very long time. Adam Jonas is still your go-to. Jonas, Charles Dickens used to write every day. I just got to do Stephen King. Answer the short stories. There's Dickens. There's
So like the
King,
bot's got
and then
40 points at most? Yeah.
Right?
Oh, that was a great piece.
It's 720, no long.
Of course, their $500 drones, our $60,000 drones don't really cut it. Look, if we were really, I would send the Joint Chiefs of Staff. I think I would just send them over to Ukraine and tell us how to do it. I mean, this is remarkable.
What
This is
picture?
dry run for World War III, if really needed to happen.
Why are you faking it?
I mean, the takedown of the bombers by $500 drones. $7 billion worth of bombers for $5,000.
A lot of discussion about Ukraine actually having some cards. Our envoy to those talks said that attack actually has raised some of the risk levels because it was so damaging to those bombers.
I think if Zelensky were to come back to the White House, ain't no Trump.
Yeah,
he's got the President Great Bridge. I mean, he's got a full house. All right. And what does he want? What do you have to have a former prime minister guy?
That's getting all rolled into some of the European discussion. The last thing, Jim, I'll mention is some travel. Caesars is notably weak. Apollo with another chart of foreign arrivals to the top.
What do
10
you want?
continues to fall.
Look, it's Royal Caribbean.
Oh, dang.
It's Marriott. Boy, that interview that you had with Marriott.
We got about 10 minutes, so let's just wait.
You realize, wait a second. This is the one. Booking Holdings, Marriott.
Yeah, trying to take it slow, not blow anything up.
You do?
Yes. Oh, no, I think that those are going to survive this downturn. And this momentary downturn. I mean, I think that, look, everyone's positioning themselves for the next posting. I mean, the president obviously is in a posting mood. He's feisty. In other words, stay away.
Right. It's amazing what can happen when things are just quiet.
Oh, wait, how about when Secretary Besson comes out? That's good for 10 and a half. I mean, you put that guy out. He's money. He's money. He's like, you're with him, you got 2 9s and the deal is showing 4. Big boom, split.
You're doing good on that, Coffee. Keep milking them.
For 35 years.
Meantime, we're 12 points from 6K. Let's get some services PMI with Rick Santelli. Morning, Rick.
Good morning, Carl. Yes, these are S&P services and composite final reads. The main numbers get tossed, and there's improvement from 52.3 up to 53.7 on services. That's the second highest of the year, best since February. And if you look at the composite, very similar, from 52.1 mid-month to 53.0 May final. Also, second highest read of the year, best since February. We have more ISM services to come up from the PMI perspective at top of the hour. Suffice it to say, March of 23 out earlier pushed yields down to levels that they're currently trading at, down almost a half dozen basis points in a 10-year note. Squawk on the Street will return after the break.
Is brought to you by PIMCO, a global leader in active fixed income.
Yeah, long would have been good if you didn't get stopped out. Oh, we got 10 minutes now. Let me try to short it again at 789.
Stepdown means change for adults with obesity to help lose weight and keep it off. Stepdown can help adults lose up to 48 pounds. And some lost over 58 pounds.
It's changing what I believe is possible when it comes to weight loss.
Don't take if allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Tell your doctor if you get a lump or swelling in your neck. Stop Stepdown and call your doctor if you have severe stomach pain.
Later,
or
buddy.
Serious allergic reaction. Severe side effects may include inflamed pancreas or gallbladder problems. Tell your doctor if you experience vision changes, depression, or suicidal thoughts before scheduled procedures with anesthesia. If you're nursing, pregnant, plan to be, or taking birth control pills. Taking Zepbound with a sulfonylurea or insulin may cause low blood sugar. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and worsen kidney problems.
I'm working to help break the cycle of weight loss and regain.
Because Zepbound means change. Ask your healthcare provider about Zepbound. Explore savings options today.
TimberTech decking looks like real wood.
But there's no hassle of maintaining it.
I just take the leaf blower and blow the leaves off of it. It's fantastic.
We have a sectional out there, and we'll sit out there with a glass of wine and feel like we're in heaven.
You've asked me that 3 times already.
I did?
Worried about your brain health?
Ooh, freebies. I love freebies.
Focus and concentration. Those
Let me
taking
put everybody,
brain wellness experienced a slower rate of brain shrinkage. Now also available without a prescription at serafolin.com.
Oh, they're just picking the names. That's gonna be hard to win.
Just recommended Serafolin Brain Wellness.
Yeah.
I'm thinking company-wide power nap. Anything can change the world of work. From HR to payroll, ADP designs for the next anything. Breaking earnings news, PVH, Dollar Tree.
Yeah, I'm not gonna try to win that.
Market reaction. Strategies for your portfolio. This week on CNBC.
Why is Tesla dumping?
Plus. Look at what the regulators said we did wrong. No question they were right. It's always hard to, it's not what's there, it's always hard to look back and say, does the punishment fit the crime? But there's no doubt that significant action needed to be taken because of the things that we had done and the fact that we weren't making the kind of progress that we're expected to make. And so the reality is the regulators have been extremely tough on us, extremely direct, and I think appropriately so.
Wells Fargo's Charlie Sharp earlier this hour talking about the asset cap and regulators. And speaking of which, coming up in the next hour, Senate Banking Committee ranking member Senator Elizabeth Warren, who is against the Fed lifting the cap on Wells. We'll be right back.
How will you shape the future of energy with confidence? What does it mean to be essential?
At its most foundational level, the mission for power and utilities clients, and utilities in particular, is to provide reliable, affordable energy.
From evolving supply and demand to pricing uncertainty, EY understands the disruptions energy companies face and how to drive the outcomes that matter. AI and technology are one of the driving pieces of innovation for the population worldwide. That requires an immense amount of processing power, which requires an immense amount of energy. The volume of energy demand and growth still requires us to innovate in the molecule. So whether it's in the plants,
I want along now, but I'm scared.
EY's full spectrum of services help energy companies maximize
7 minutes. Let's just wait.
profitability and performance. 10 years ago, the work that we did for our clients was energy for energy, industrials for industrials, tech for tech. What we're doing much more now is helping our clients build ecosystems across the entire value chain of energy. EY, shape the future with confidence.
The number of public companies is shrinking, while the number of private companies is increasing. At Franklin Templeton, we're expanding access to the growing opportunity in private markets, offering the potential for greater diversification and enhanced returns. Through our world-class specialist investment managers, we are empowering advisors with solutions to build the portfolios of the future today. Alternatives by Franklin Templeton, your trusted partner for what's ahead.
3 minutes left that's topping out for NQ, so maybe we'll drop.
And we're Steph Curry, there's brand value there, there's brand awareness. Business of Steph Curry.
Yeah, we have 5 minutes. Let's just wait.
Only on CNBC. Challenging the standard of what comes standard. The next generation GMC terrain elevation. We choose to challenge. We challenge completely. Current eligible license can get this low mileage lease on this all-wheel drive terrain elevation for around $299 per month. We are professional grace.
Whatever I put on, whatever I wear, I just want to be confident in it. It's important to be authentic for yourself and just be who you want to be. People are going to like you, people are going to hate you regardless of what you do. So don't be fake, just be real.
We're gonna reset right now. Yeah, that's bad timing.
Time now for Jim. It's not trading.
A rather remarkable condition today.
Thanks.
A bunch of
You think they're doing the
companies
codes or
that
just
they really
pick the name again?
When I look at
Okay.
this, I know they cut too
Let me
deep.
get my shit
Amazon
open
and
up
Oversight,
and
but
ready.
I'm gonna focus for a moment on Meta.
Which
Meta
one do I
is
need?
flying,
I
and it's
need
long. This idea is
150K.
675 goes to 735. A mea culpa. Meta did not get hit that badly by Liberation Day, and I think that this is a remarkable way to for a research partner to do, which just says, you know what, we were too negative. Let's come back. I wish all the research partners were that flexible.
4 minutes for data.
That Rick Santelli mentioned. I think that NST Pal.
Yeah. I better cancel my short.
Order canceled.
Just in case.
You're referring to the PMIs that we just got.
PMI was good. I don't know if I were the president, I would be flummoxed.
Yes.
Flummoxed, but I think you may be able to find a way to dismiss them. PMI's pretty.
I mean, Atlanta Fed's calling for a nearly 5%.
Eval,
I
think you can, yeah, just the other one you can't.
Changes every day.
Yes.
They swing with the breeze, those
Yes.
fellas. But I do think that
Who?
if you get a weak employment number on Friday, it will matter. That's when you should save it for that, Mr. President, because if it turns out to be strong, I don't want you to look bad. Right. That's not good.
You do have George Kurtz tonight. Talk some
Gandalf?
Crowdstrike.
That's the
And
code?
Again, I mean, George is a long distance driver.
Wizard.
Good to stockade.
Gotta be wizard. Oh, that
I
was
went over this, the recurring revenue so-called
Wizard.
problem, and I think you're going to find that this second half is so
Nope,
good.
code didn't
that
exist.
This is an unbelievable buying opportunity. George Kurtz, he visited 130 clients in 100 days. Okay, I was in Italy. I saw him. It was like trying to see like a whole bunch of banks in Italy. He lost nobody. He lost nobody. But there's 3 analysts who don't know what they're doing. Who say, he's an idiot. He ain't no idiot. He's a winner. Sebring, by the way.
You ain't got time for that.
That's a good hour. Good hour with Sean Finney. We'll look forward to tonight.
Charlie's good man.
Mad Money, 6 p.m. Eastern Time. And we come back a big hour on tap again, including Senator Warren and Ray Dalio as the market inches ever closer to 6K.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment.
We thought we had planned carefully for our retirement.
But with quickly realized we needed a way to supplement our income.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-523-6900.
Right, yeah, you can do.
Redefining insurance. What makes a Medicare supplement insurance plan, like an AARP Medicare supplement insurance plan from United Healthcare, a good choice for people on Medicare? It's smart for you to have now.
I'm 65.
And later on, for the future you.
I'm 70-ish.
It's really smart.
Hey, looking good. You made a great choice for us.
With this type of plan, see any doctor or visit any hospital that accepts Medicare patients. There are no networks. Your healthcare future will have more freedom.
I kept your doctor. And when I needed a specialist, no referrals needed, right? Bingo.
In fact, see any doctor anywhere in the U.S. Really smart to have when you travel.
When I visit this little cutie in Arizona, my plan goes with me. Grandkids! I can't wait.
Don't worry about surprise medical bills.
1 minute.
You'll know up front about how much your care will cost. And knowing your expenses makes planning your financial future easier.
I'm glad my husband and I can use our savings to do the things we want to do. I'm glad I don't have to shop for a new plan every year.
That's right.
There's still a lot of squeeze on the
It's guaranteed for
bull side, so we might go up.
questions. Call United Healthcare now to talk with a licensed insurance agent or producer. They know a lot about what makes these plans smart now and really smart later. Or just ask for this free guide, benefits and rates in one place, so it's easy to compare options. Year to year, 94%
Get ready,
of
gang.
members renew their plan. Supplement plans with the AARP name are the only Medicare supplement plans endorsed by AARP, meeting their high standards of service and quality. So give United Healthcare a call today and set yourself
What
and
happened?
your yourself up with an
Oh shit, my Ninja Trader just froze. Yeah.
Thanks again for looking
I want to long this shit. Must be bad.
Medicare supplement plan from United Healthcare.
Okay.
Smart now, really smart later.
Never miss a moment. I think tariff anxiety comes from there's been so much change
Ooh.
in the last few months that it doesn't
Should
matter
we
where you
long?
are in the world.
Dang.
These CEOs all have a little bit of tariff anxiety.
I'm gonna gamble. I'm gonna put long at 698. Don't fuck me.
Agents, which are essentially workforce robots, information robots, and human robots, physical robots, to expand the world's GDP.
I still think we're gonna pop back up.
Good morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla, live from Post 9 of the New York Stock Exchange. David Faber is off today. Take a look at stocks. We're going for 3 days in a row of gains here. S&P 500 up 0.1%. The Nasdaq's up a little more than that. Another positive day. It is being led again by technology and communication services. In particular, Meta's up 2%. Alphabet's up a little more than 0.5%. Healthcare is gaining today. So are materials as those steel tariffs kick in, and industrials. Financials a little bit down, and utilities, the worst performers, down 1%. As for treasuries this morning, we have some
It's coming back
to
up.
discuss going into Big John's Day on Friday, and there's buying. So relative calm in the bond market. 10-year yield 4.4%. 2-year yield moving south. That's the one that's really
Dang, I should
sensitive to
have
where
long
interest
earlier.
rates go.
I've been reading long
3.9% coming your way.
705.
Bridgewater's Ray Dalio will join us
Orders
with a new
submitted.
warning about America's ballooning deficit and how to avoid an economic crisis in this
A long ass code. Gandalf the
Senator
Wizard.
Elizabeth Warren calling the Fed's decision to lift Wells Fargo's asset cap, quote, an outrageous giveaway
Huh?
to
It's a
Wall Street's
bear?
most derelict banks. She will be with us
Oh,
to
Gandalf
discuss.
the Bear. Okay.
Meantime, you can see markets responding to ISM services. Let's get back to Rick Santelli. Hey, Rick.
Yes, boy, move down again. And the issue is our May reads for ISM services PMIs, and here they are.
Oh shit, the code did work. Hold on, it's going very slow.
Expansion territory, but instead
0. Hell yeah.
under
Thanks, Chris.
and the last time it was under 50.
Yeah.
On this number, you look at prices paid, the opposite. They're moving higher from 65.1 to 68.7. That's definitely warmer than we expected. That's the hottest prices paid
I'm gonna
since
reset that tonight.
of 22. But the market certainly seems to be more focused on weakness than the inflationary implications of prices paid. New orders, 46.4. Once again, back in contraction mode, and that's the weakest all the way back since D's of 22. And finally, on the employment front, and this is important.
Oh shit, my alarm's gonna
Order
hit.
filled.
There we go.
And of course, Friday we have the big job
Order
report.
submitted.
This one climbed over 50.
I'm at 7:05. I need to get out.
Well, just Feb of this
Forgot to
year.
cancel
But
that.
indeed, we retook expansion territory. Now, as we sit at 440,
Fuck.
we're literally exactly down a half dozen basis points on a 10. Carl, back to you.
All right, Rick Santelli, thank you very much. Meantime, some new data from the New York Fed this morning. A survey of some 300 businesses found that for those facing tariff cost increases, most passed on at least some of that to their customers, with nearly a third of manufacturers, almost half of service firms fully passing along all tariff costs by raising prices. The others reported they were absorbing some of the cost hikes. Despite the uncertainty around the trade policy, businesses are reacting quickly. Over half of manufacturers and service firms said they raised prices within a month of experiencing those cost increases, many within a day or a week. Something we'll keep an eye on.
Order filled.
This is-
I got out.
Again, we talked about the shift
Order
between
submitted.
survey data and the hard data, but this is certainly one way respondents are talking about what's happening.
I guess we'll wait to see whether it shows up in the headline inflation numbers, because it hasn't yet. We keep seeing softer inflation numbers, and now we're seeing softer job numbers. So that's where ADP comes in today. Private sector jobs read, and it was much weaker than expected. Only 37,000 jobs were added in the month of May. Weaker than expected.
Order
and
filled.
Order filled. As you can see from April, it's
Order
actually the
submitted.
weakest level in 2 years. What does this mean for Friday's jobs report? Well, there's not a really direct correlation. Some people see it as a leading indicator, but it is worth paying attention to because it gives us a snapshot of
I'm long
what
already
companies
at
are doing. And if you break
94.
that down further, you
And
can
I'm
see the
out
job
at
losses really came in the
700
goods
if it
producing
hits.
sectors. That 2,000 negative on that. Where services producing sectors
Order
were still,
canceled.
that tells
Yeah,
you it's about
that's
tariffs,
kinda
right?
out.
Because that's where the tariffs are. They're on goods producing sectors. It's no wonder President Trump tweeted, ADP number out, too late Powell must lower the rate. He is unbelievable. Europe has lowered 9 times. If he's making the argument to get
Yeah,
ahead of the economic
it's down.
weakness,
I got mine already, so I'm cool.
these numbers give him further fuel, and so do the recent inflation numbers.
Yeah, small businesses, firms with fewer than 50 employees cut on a net basis. Peter Bookvar with a nice note. Should we really be surprised? Put yourself in the shoes of an employer. You can understand the hesitancy many business people have, especially small businesses don't have the flexibility of larger firms. But we don't seriously believe that a rate cut now is going to mean anything for months, right? The transmission mechanism takes a long time.
I don't know. I mean, it goes through to the market. I mean, it could definitely, through the you see the 2-year yield moving lower today. That's one of the ways that transmission mechanism is more immediate. Same with the U.S. dollar, which has been weak, and that sort of eases financial
See
conditions
the
along
bot's
with
gonna go short or
lower
not.
rates. The debate
No,
is
bot's not
whether
gonna
they
go
need to
short,
wait
but it looks like
a
we're
few
gonna drop
months to
more.
see the inflationary impact or lack thereof of tariffs, or if they're getting what they need right now to say, okay, we'll move a little closer to the cut. Just more granular jobs data, because that is the other part of their mandate, and if it's weakening, they need to be careful about that. But yesterday we got the JOLTS report, so job openings, we're up, we're high, that's good. Layoffs were a little bit higher as well, but how about the quits rate? This is a good indicator, right? So if you
Bet you a
feel
lot of people
confident
blew
that
on
you
that
get a new
long.
job, you're going to quit your job. So that number was really
Dang,
high
still
coming out
going.
of the pandemic, as you can see, above 3, because people felt like there were a lot of job openings and they could go out and get a job. It has steadily come down, and it went down again in last month's number. We're not, in recession type levels here, but it's something to watch as the Fed pays attention to the cooling off of the labor market, and that is certainly happening. We'll see if the jobs report on Friday confirms that. So far, it's been calm, but
Okay,
it-
bot
it's
might
really
short
good
soon.
because it's a soft landing. It's not any big drop off. It's not recessionary, but there are signs that things are cooling, and that's to be expected with what's happening with tariffs.
Interesting chart, lower highs and lower lows. Certainly for more on the market and this morning's data, let's bring in Oppenheimer Chief Investment Strategist John Stolpers here at Post 9. John, it's good to have you back.
Oh, great to be back.
There has been some chatter about, if you look at Q1 GDP consumption got revised lower, construction spending was weak, ADP today. Are we entering a stretch of weaker data?
No, I'd have to say not necessarily weaker data that should be of overly concern, but we would have to think, much like Sarah was just saying, you really got, it looks like a relatively soft landing that we're experiencing. And we've been looking for that for ages, you know, because the Fed, raised 11 times, then paused 9 times, began the cuts last September in terms of rate cuts.
Guess that is really bad, huh?
Bips, and then 2 cuts of 25 bips apiece in November and December. We think they're going to cut again probably in September this year. But again, a down payment just to show the market rates are normalizing, maybe 25 bips in September.
Again, though, prices paid on this print, and then the other day on manufacturing prices paid, like above 60 for 4 months.
Yep.
Is that a landing?
No, I think that we don't know really where the landing is.
I need to pump a little bit more. I can short.
That's occurring related around the tariffs, which is still very much unknown where we land. What we found essentially with Trump 2.0 is he's most certainly it's not so much that he chickens out, it's just that he responds to the reaction of the market when it's too hard on the tariff thing. We've seen that over and over again since the tariffs were placed, much to all our surprise, I think, so high on April 2nd. He's maneuvered. Okay, so you know.
Market's 20% off the lows that it hit on April 8th.
Okay, bot's short now.
What does that tell you?
Well, I think what
I might join in.
Look at May, the best performing sectors.
Yeah, I'm gonna join in.
Were information technology, communication services, consumer discretionary, financials, and industrials. Not necessarily in that order, but they were very, very powerful rallies. And we can't help but think the market is telling us most certainly where it wants to go. And I think it's illustrative to the administration, and that's for their consideration. I think Scott Bessent helps soften the harshness sometimes that comes out of the Oval Office.
John, stick with us. We do have some breaking news. For that, we're going to turn to Emily Wilkins. Emily, good morning.
Good morning, Carl. Well, we have been waiting for this. The total cost for the Trump mega bill. We now
Come on, don't pump when I'm short.
$2.4 trillion over the next decade is how much that House passed bill is expected to add to the deficit. That, of course, comes as Elon Musk pulled out the bill for adding to the deficit and the debt yesterday, and as senators are trying to find a path forward.
Bot's short at 657, so I short at 668, so it's gonna hold on to and just wait.
Again, $2.4 trillion over the next decade, going to become a very key talking point up here on Capitol Hill as the Senate works on moving that Trump mega bill. Guys? Okay, Emily, thank you. Emily Wilkins. John, should the bond market be concerned about this?
I think it's normal for the bond market
I hope it
to be
goes
concerned
down.
about this. I think the relative. Now, I couldn't hear what was going
What
on.
account?
$2.4 trillion over the next decade to national
Yep.
debt. That's how the CBO is
The
scoring.
pro?
I think until we get an idea of what kind of.
Were you doing NQ or
that's
you doing
coming from the
the
administration,
smaller
how that
size?
actually works. It most certainly will be something that keeps
Oh
the
my
bond
God.
market from becoming getting an ebullient spirit. That said, I think for the equity market,
I'm still holding
you know,
mine.
it
You got the payout, right?
We just saw the small and the mid caps look like they went to negative a little bit earlier.
S&P just went negative.
And
It's coming
with
back.
that, but
Yeah, your
that's
sizing
very
is too
natural.
big.
It's the reaction. Traders usually take right away. They take the negative,
Especially the
and they take it to the
25K.
nth degree. Meantime, the intermediate to longer term investors are buying the babies that get thrown out with the bathwater almost right on top.
I'm
of
stuck
it. We've
holding
seen
now,
that
so hopefully it goes back
consistently
down.
this year. Over and over. You need to have you have to have either the Peps or the Tums nearby with all of this happening. But at the same time, the reality looks like the softer data doesn't, and the projection of negativity is not overwhelmed because the fundamentals remain remarkably good.
Right. Well said, given 3% from the highs on the S&P. John, thanks. See you soon.
Thank you.
John, stop being with you.
Here is our roadmap for you for the rest of the hour. Is the U.S. headed for an economic crisis? Bridgewater's Ray Dalio joins us with his warning for the market and how to fix it next.
Senator Warren's with us, slamming the Fed's decision to lift that asset cap for Wells. We'll talk to her about that news and
I think it's going to drop more later. Just give it time.
We'll talk about the upcoming listing of stablecoin issuer Circle, which is expected to price tonight. Big show still ahead. Stay with us. Walk on the Street will be right back. Dow's up 16 points.
Yeah. I'm gonna short on some Apex. Work on some Apex too.
Order submitted.
Put 720 just in case.
Your shipping manager left to find himself, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
For plant-based, healthy blood pressure support, there's one brand that stands above the rest. It's Superbeats by Human, the #1 doctor, pharmacist, and cardiologist recommended B brand for heart health support. Find out how to get a free month with your first order at livehuman.com.
I guess I'm not the easiest person to please.
I hope it's not tilting, dude.
Just right. That's why I love Redfin's home recommendations. They know what I want even before I do. A home that's
Dude, get size down.
Yeah.
Dang, and almost at 720. I don't think so. It's gonna drop. I got 4 MNQ. I'll add some if it goes up.
Hey, get away! Your guys' garage is on fire! 10 years ago, I invented the Ring video doorbell for moments like that, and Ring security cameras for moments like this. We get your video. And Ring alarm?
Yeah.
Professional monitoring.
Would you like us to request emergency services?
Yes. 10 years of reinventing home
Come on,
security
dump this shit.
and tens of millions of safer homes. Protect your home the way I do. Learn more at ring.com.
I have another short of 684 in another account, so.
The all-new 2025 Infiniti QX80. Most luxurious.
I do need to work on my TPT, so I might have to short on that.
Elon Musk blasting
Order
President Trump's
filled.
big beautiful bill on
Order
X, calling it
submitted.
a disgusting abomination of pork-filled congressional spending that will burden Americans with crushingly unstable debt. And as we reported just a moment ago, the CBO out with their estimate saying that the tax cut and budget bill would add $2.4 trillion to the national debt.
Dude, that is
Well, our
bad.
next
Shouldn't
guest
that
has a
go
brand
up
new
like
book
this?
out this week all about the topic of debt, and it is making the rounds in Washington.
Order
It's called
filled.
How
That's my
Countries
17.
The Big Cycle.
Order
Joining us now,
submitted.
the author, Ray Dalio, founder of Bridgewater, one of the world's largest hedge funds. Ray, it's good to have you. Congrats on the book.
Thank you.
So, if the U.S. went
Dude,
broke,
what the hell?
Yeah. The reason I wrote the book is that for about the last 50 years, I've been investor
Yeah, this is bad.
who has bet on bond markets, and I've been through plenty of these debt crises. They happen over and over, and they're not understood mechanistically. So the book, the purpose of the book, is to explain the
Order
mechanics
submitted.
of how this happens as it applies to the United States. And so I'd love to just take a minute and explain the mechanics of it.
There we go. Oh, got out.
yes, I mean, we do. We get the headlines every day on
Maybe
the high
short
debt and
again.
growing debt load. So tell us
Order submitted.
what we need to be aware of.
Yeah. In other words, why now, not another time? Is this a false warning? What
I
happened?
still think we're gonna
I
drop. You
just
just
wanna
gotta hold
convey
on.
that. There are three things that happen. When you could think of the credit system for the government as being very similar to your own credit system, or if you're running a company, what it's like to run a company,
Here we
again,
go.
except for two
Get it.
different
Let
things.
me up.
They can print the money.
Order
There
filled.
we
They
go.
can take the money from you through taxes.
Say, I got.
But the economics,
I got 2 more
is
accounts.
basically the same way. And so
I
think
need to
of
size
the
up more on this
circulatory
TPT.
system.
Order
like there's
submitted.
this great circulatory system that brings
Order canceled.
Put my thing in.
Order submitted.
credit to people. And then if they use that credit well, they produce profits, and the profits pay for it. And so if debt is rising relative to income, that's a problem. And so what happens is mechanistically is first that as debt and debt service rise, then the debt service
Just change your
interest
ticker,
rate,
dude.
and
Don't
the
play the
debt
big ones.
payments
It's too much.
increase and squeeze out spending. And so you're
Oh,
seeing
shit.
that. In other words, you're seeing, I'll go into the numbers in
That's
a
a
second.
straight to
I'll just
funded.
bring
I'll
up
type that.
three forces. The second force
Huge.
is a buying and selling. In other words, the one man's debts are another man's assets. So they're holding these bonds. There's so many people who are holding bonds around the world, the debt holders. And that they then take those
Oh, yeah,
bonds.
yeah, my bad.
And if they now have to buy a lot of other bonds because we're selling those bonds. Not only is there a supply-demand problem now, if I actually calculate who are the buyers of those, there's a reducing demand relative to the supply. And if you get into a position where they have to then
Not sure it's about to
worry
hit
about
again.
those bonds, they could sell those bonds. So the amount to be sold, it
Oh,
can be
I
much
think Gambit
greater
tilted.
than the amount of the new debt that's being produced, and there's a supply-demand problem. So the second factor is the supply-demand, and the third is when that supply-demand problem happens, either interest rates go up or the central bank comes in and prints money. So if we go through those numbers, I can take you through them pretty quickly. You
Order
can see
filled.
the position
Yeah,
of
my
the
ship went
US
in.
and the problem.
Order submitted.
Right. No, and all good issues. And I think it's why you have people like Jamie Dimon coming out and saying we're heading toward a debt crisis, and why Elon Musk is so worried about the debt. The biggest question I have, Ray, is how urgent of an issue is this? Are we actually seeing evidence about what you're talking about happening?
Yeah.
Yes, it's urgent. It's urgent because we are on the brink of the supply-demand. Just to put it in perspective, imagine you're running an enterprise, a company. You're spending $7 trillion a year. You're taking in $5 trillion. You have a $2 trillion deficit. You have a debt
Order
that's
filled.
6 times the
Order
amount of money that you're taking in.
Oh man, he's
The
pumping.
interest
Got a
on
couple
the debt
shirts now.
is $1
Order
trillion.
submitted.
That's 20% of all your spending and 50% of your deficit. And you can't cut the costs materially. You can't cut the costs because Social Security, all of these things.
Sure, it's political.
Okay, so you have a real problem. You're at this junction.
I was expecting a big drop on bad data, but man, it came back up.
That means that you're at this point where as the debt
There we
then
go.
compounds on the debt, and it's
Order
squeezing
canceled.
out.
There we go.
It's 50% of the deficit. So it's going to squeeze out your
Order
supply
submitted.
demand problem. So if we go another year and a year after that, which is probable, it's probable that nothing materially will be done until after the midterm elections. You're going to then have a different set of circumstances. You have more debt that you have to compound, still no plan to deal with that debt, and you have a political situation. Should you have a recession, it worsens. Because the recession not only makes people more confrontational, but it also raises the budget deficit. It's the biggest influence in the
Order
budget deficit.
order canceled.
So it's very
Got out of the
important
shorts.
to be able to deal with this consideration now. It was dealt with
Yeah, profit. No,
There was a
profit.
cut of 5% of GDP.
Order
If
submitted.
they can cut from the targeted 7% of GDP to about 3% of GDP.
It's all about
in other words,
sizing.
a cut
Just
of
if you
about
size it
4%
correctly,
of
you'll get
GDP.
out.
Not only do they have budget benefits, but they'll have lower interest rates,
Yeah.
which contributes to better balance. That was done between 1991 and
Yeah. I'll make sure I have like 120 points on the stop loss. Just keep it safe.
3% three-part solution. 3%, get the deficit down to 3% of GDP. Spread it out. That means you probably have to change revenue
Yeah.
and taxes tax revenue and expenditure by about 4%. Squeeze in 4%. And if they do that, they will have probably a 1 to 1.5% decline from interest rates, and that will reduce the deficit by nearly another 2%. And that would be the path. That's what I call the 3%, three-part solution. On
Here we
both
go.
sides
Drop
of
it,
the
baby.
Congress, I've spoken both sides. Agree on the numbers and agree on the mechanics.
The Treasury Secretary talks about 3% deficit to GDP. I mean, they want to go to order, but they're trying to.
There you go. I got out. Yeah, let's go. I got $20 more and I can meet the goal on this FE and then get back and get my payout.
Agrees that if you don't turn the course, and let me go left to right, if you have this, don't get to the 3%.
So you know when you hit DLL, right? It takes so long to get back. I was down like freaking over 12 or 1,600, almost back to 50,000. And I make maybe 500. I just want to cash out.
So it sounds like you would like to see the Fed actually lower interest rates because the interest on that debt is so much and has gotten to such high levels, more than defense spending. Is that something that would help?
You can't unnaturally lower interest rates without a negative consequence. Think of it this way. A bondholder wants a certain interest rate, and that's measured by the real interest rate. And if you artificially lower the interest rate, then what you're going to have is the problem that it's a worse asset to hold. And that can be a problem. But if you change the supply-demand picture the way I'm describing to lower the interest rate...
What do you mean by keyword, Gail?
You don't get richer by lowering interest rates or printing money.
It's not buying it, right?
So you have to deal with this in a balanced way, the way it was done really between 1991 and 98 as a general example. In the book, I give several examples.
Oh, let me go to the buy section. Maybe that's a coupon for free.
Do you think that the dollar's reserve currency status is genuinely threatened right
Oh, you
now
try?
by this by the risk you're laying out?
Yes. A debt
Yeah.
currency
I'm gonna be steady.
is a medium of exchange and storehold of wealth. We store it in a debt. And if there's a depreciation in the value of the currency, there's a depreciation in the value of the debt. And because there's a need, because there's this problem and these imbalances and so on, this is a big issue. So the depreciation of the dollar is making, and the expectation of a depreciation of the dollar makes it less attractive to hold that. Now, there are by the way, most countries around the world right now are dealing with this. Europe has a debt problem.
And it looks like a lot of us didn't do well on the short.
So what happens is that all of these countries have this problem and will probably depreciate their currencies in a sense.
Let me put one in for 724. I just need $20 more.
And it's probably likely that this happens again.
Order filled.
Yeah, it hits. That was quick.
Currencies falling in relationship to gold, goods and services, and so on, and then you can have an inflation. The problem you also have to worry about is when the government, the Federal Reserve, buys the debt. It takes a position in that debt. When it starts
Just trying to play with the bot until the bot comes along.
Yeah.
Then it has losses. It can have a negative net worth. That's the situation now. Then you get into the need to monitor.
My other short's gonna hit 733.
To be careful about, and that's why it's been repeatedly in this
order
book, I covered 30
order submitted
35 examples of the mechanics, and so that's the mechanics that we're dealing with.
Order submitted.
So it's clear, you make it very clear what politicians need to do, and I think that they will find this book helpful, and hopefully they'll be able to get a hold of
Order
it.
filled.
What about investors? I mean, it sounds like you're making the case for gold
Order
here,
submitted.
and why you've liked it for a long time as a diversifying asset. But what should investors do? Should they stay away from U.S. bonds? I mean, we did see the 30-year
China
yield
news.
cross 5%. Wonder if that's an indication that the dynamic is changing.
investors need to have a diversified game plan. I'm not trying to get them to time the markets and move in and out and so on. The most important thing is that they have a well-diversified game plan. My own view would be that debt is going to be a problem. We have too much debt. We're going to get a lot more debt. So debt assets as a general thing is something to be worried about. But don't go whole hog in anything. But
Let's see what the
it
buck.
is
Yeah,
true
it's not gonna go long.
that if you were to take a balanced portfolio and say, does gold serve as
Order
a
cancel.
diversifier?
Got out
I
one.
think it's going to be a good asset. But it also is a diversifying asset, not a lot. Maybe that's 10% or 10 or 15% in a portfolio. It's an effective diversifier. I think the key at this time is we're going to become in a very risky environment, not just because of the
Elijah
about the debt, but we have a great deal of internal conflict between the left and the right.
Everything's
and
negative
what's
today.
going on. We have a changing world order in which there's external conflict between countries. What is the world order like? And then we have other things developing. So I think we're going to be in a period of greater than normal risk. So when you start to think about what is the best portfolio that's a diversifier portfolio, the power of
Order filled.
diversification in
Order
reducing
submitted.
your risk without reducing your returns is a great power. So I would encourage the understanding of proper diversification with a bias to stay away or shy away from debt assets.
And what about equities then? Because if what you're talking about comes true, it feels like it would be very risky for all U.S. assets.
In real dollars, yes, it depends how bad it gets. If it gets to be like the 1970s, it would be bad for all the assets, but the gold portion, or maybe to some extent a Bitcoin, depending on where you're thinking, or whatever that inflation hedge asset, will then go up in that environment to provide some sort of a diversification. So if you have a balanced portfolio that way, and you get into a type of 70s, what happens for just depreciation of the currency, if it's not a lot, it actually is supportive to equity prices. The problem right now is that if you look at equity valuations, they're relatively high in relation to bond valuations. That means if interest rates go up,
Order canceled.
it's bad. It's very bad for both of those markets.
Got out.
So the Fed will have to come in. But that diversification would be the main thing I would emphasize.
Well, Ray, it's great having you on the week that the book is out. It is a very timely conversation with what's happening in Washington right now. Thank you for the time.
Thank you for having me on.
Ray Dalio, book is How Countries Go Broke, the Big Cycle. And I've been told that lawmakers are taking a look at that. And I think that discussion is live right now as they're talking about the big, beautiful bill and whether they have the political stomach to actually cut. And you can't really cut those numbers unless you're talking about entitlements, Social Security, Medicare. That's tough stuff.
Right. There's the tax cuts too. There's both the revenue side and the spending side. Still ahead this morning, Wells Fargo shares moving higher on news the Fed is lifting the bank's asset cap, but not everyone's happy about the move, including Senator Warren. She is going to join us live in a First on CNBC interview. Coming right up. Don't buy another stock before reading this book, because when you see the returns you could be making on options versus stocks, you'll realize that in today's market, buying and holding stocks alone, it's not an option. The simple, beginner-friendly option strategies you'll learn in our new book could take your investing returns to a whole new level. And today, we'll give you a copy for free. Get your free copy while they last at itsnotanoption.com. Itsnotanoption.com.
Introducing AG1 Next Gen. The daily health drink backed by 4 rigorously designed clinical trials. Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's the next generation of AG1 is here.
want to know where to invest $1,000 right now? Well, forget about AI, quantum computing, electric vehicles, cryptocurrencies, or robotics. A little-known technology is expected to become roughly 10 times bigger than all of those technologies combined. The World Economic Forum says that it's
somebody
arguably
wanted
the
straight
most
to
exciting
funding, not
human
us.
discovery since fire. Hi, my name is Whitney Tilson. I'm a
Yeah,
former hedge
some
fund manager. I've
guy.
been featured in
Wait a minute,
virtually
I sent
every
a
single
screenshot.
major financial publication and TV show. Now I'm stepping forward with what could be the biggest story of my career. One market insider predicts that this technology could be even
Man,
more
this NQ
important
is
than the
being
Industrial
stupid.
Revolution. And I want to give you, free of charge, the name and ticker symbol of the company at the center of this technology. Simply visit the website on your screen.
It better go high day.
Recommendation now.
Oh, well, Apple went long.
Is a Bitcoin ETF the same as owning Bitcoin directly? While Bitcoin ETFs might offer a familiar face, they lack the true ownership and flexibility of directly investing in Bitcoin. With iTrust Capital, you can buy and sell real Bitcoin 24/7 with the tax advantages of an IRA. Real Bitcoin means no middleman, no restricted stock market hours. Choose the path of direct Bitcoin investment with iTrust Capital, because access equals opportunity. Invest in Bitcoin at itrustcapital.com today.
Michael Jordan's the only guy who can compare in terms of confidence. When you're Steph Curry, there's brand value there, there's brand awareness. Curry Yank, the business of Steph Curry, from Eastern 9 Eastern and Pacific, only on CNBC.
CNBC News Update with Silvana now. Hi, Silvana.
Hey, Carl, good morning. A U.S. and Israeli-backed aid group paused distribution today at its 3 sites in Gaza amid safety concerns. There have been a series of shootings as thousands of people flocked to the Gaza Humanitarian Foundation distribution points, including one yesterday that Red Cross and UN Rights Offices killed 27 people. Israel's military said troops fired on people who approached its forces and ignored warning shots. Closing arguments are picking back up this morning in Harvey Weinstein's sex crimes trial. Prosecutors argued yesterday the movie mogul used his power and influence to trap and abuse women, while the defense claimed the women accusing Weinstein are lying. Jurors are expected to begin deliberating this afternoon. And the Department of Transportation warned this morning it is likely to take back $4 billion in funding for the $128 billion high-speed rail project in California. In a more than 300-page report, the Federal Railroad Administration cited several issues, including budget shortfalls and questionable ridership projections. California now has until mid-July to make its case to keep the funding. Sarah, I'll send it back to you.
Okay, thanks, Alana. Senator Elizabeth Warren calling out the Federal Reserve for lifting Wells Fargo's asset cap, saying the bank has, quote, a long history of violating the law. There's no evidence that it has changed. She joins us next to discuss. And do not forget, you can catch Squawk on the Street anytime, anywhere. Just listen to and follow the Squawk on the Street podcast, which is available on Spotify, Apple Music, and more. We're back in a moment.
We planned well for retirement, but I wish we had more cash.
You think those two have any idea that they can sell their life insurance policy for cash? So they're basically sitting on a gold mine? I don't think they have a clue. That's crazy. Well, not everyone knows Coventry has helped thousands of people sell their policies for cash.
Order submitted.
I can't believe they're just sitting up there, sitting on all this cash.
If you own a life insurance policy of $100,000 or more, you can sell all or part of it to Coventry, even a term policy, for cash or a combination of cash and coverage with no future premiums.
Someone needs to tell them. They're sitting on a gold mine.
find out if you're sitting on a gold mine. Call Coventry Direct today at 800-571-7900 or visit coventrydirect.com.
Omaha Steaks Suns Out Funds Out sale event is here. Right now, get 50%
Oh,
off
drop it.
site-wide. Save on favorites like pork tender filet mignon, juicy chicken breast, sides, dessert, and more. Order now and get 8 of our famous burgers free. Visit omahasteaks.com/TV today to save 50% and get 8 free burgers for the best value under the sun. Just in time for Father's Day.
Ooh, I'm out. I hit it. Yeah.
Seems
Order
confusingly
filled.
just out of reach.
I'm done.
If it's a work thing, it's a sure.
Sure.
Is this rough and tumble, old school, goes his own way, doesn't take orders, cowboy? We all lose our jobs if you can't pull off a miracle.
Yeah, I needed that. Still got one more. I'm like way short at 668, but it's an eval, so I don't care about all those. I went heavy on that one, but 2,000. Yeah. No, I went straight in when the bot went in, but not just for the eval, but the funded ones, I'll wait for a little longer. Throw the evals in front, so if it dies, it dies. Then you're used to funded to play.
Senator Elizabeth Warren in a statement calling the decision by the Federal Reserve Board
So all my funded screens, so that's good.
one of Wall Street's most derelict banks, adding Wells Fargo has a long history of violating the law, and there's no evidence that it has changed. Well, here's what the CEO of Wells Fargo, Charlie Sharp, said last hour on CNBC when asked if he had spoken to Senator Warren and other critics.
I try and talk to everyone on both sides of the aisle. And by the way, I understand criticisms that people have had about us in the past. In fact, I would agree with many of the criticisms. What I hope is that they would look at the work that's been completed, the independent work done by the regulators, again, the majority of which, and the conclusions likely reached under a Democratic administration, and say, this is the way it should work. The regulators actually at this point should be congratulated for driving the fix. I mean, I and the management team did a lot of the work, but they're the ones that drove this and were the ones that oversaw this and made sure that we and our board
Doesn't look like it's gonna go into 700.
She's the ranking member of the Banking Committee. Senator Warren, good morning. It's good to have you.
Good morning. Good to be with you.
Why not just take the win? I mean, this was a harsh punishment that encapsulated the better part of a decade, identifying the problem and systematically fixing it.
Well, if they had systematically fixed it, then I'd be happy to take the win. But in fact, every member of the Fed should be embarrassed by what they've just done. Look at Wells Fargo's record. You remember what happened 7 years ago when they get caught in a scandal that is so terrible, it in fact involves criminal penalties. And they set up their whole business operation around cheating their own customers and cheating their investors, and they got caught. So they end up with this penalty that there's going to be a cap on how much growth they can engage in. And what do? Do they clean up operations and say, that's it, we're never going to break the law again? Nope. Not only have they continued to break the law, look how recently they have done it. In January of this year, the SEC tagged them for scamming their own investors. In December of just last year, just what would that be, 6 months ago, the CFPB tags them for more than $800 million scam involving Zelle and their customers. And then last September, the Office of the Comptroller of the Currency tags them for money laundering. And as if all three agencies tagging them for serious violations of the law just in the last 9 months is not enough, in April of this year, just weeks ago, former and current Wells Fargo employees actually put out a report that said Wells is engaging in the same behavior that they were engaging in 7 years ago that started this whole cascade of law breaking, and that Wells Fargo has really changed. I'd like to see Wells go just 1 year without a serious violation of the law before the Fed says, okay, we're good now.
Well, I mean, we could go one by one on all of those, but many of them were not consent orders and not related to the fake account scandal, which is what ultimately had them in the consent order. I'm just curious, Senator, have you read the 20,000, I'm told, pages of documents that they had to provide, not just to the Fed, but also to an independent verification on this that allowed them to get this consent order?
So that is the perfect question. And that is exactly what I have asked for. I want the Fed to give the Congress, the banking committee, 5 years of bank examination documents. I want to see what it is that Wells Fargo represented to the Fed and what the Fed asked Wells Fargo. Remember, the oversight job in Congress is both for these giant financial institutions, but it's also oversight over our regulatory agencies, including
Can you guys see this?
to make sure
I'm gonna start it.
its job. So that's what I'm calling for right
Oh, it's on my stream for the giveaway.
Release to Congress because I think there's probably a lot of proprietary, confidential information.
Release it to
That's
the
not the way.
banking committee. We have a great deal of experience in
Oh, your
taking
thing.
confidential
Gotcha.
information and not leaking it. We've done it before. We can
Let
certainly
me
do it
shuffle
again.
this.
About oversight responsibilities. I want to see 5 years of bank examination reports from the Fed. I want to see how the Fed made the decision it made, given that Wells Fargo continues to break the law.
Vice Chair Barr, I mean, is someone that I think that you supported.
Wow.
You know, he's a tough cop on the banking beat. He led this. It was a unanimous decision by the Fed board. And again, just to go through some of the fixes, since you raised the question about the fixes, they did miss out on $9 billion.
Yeah, this is not rig or anything, okay?
They spent more than $2 billion a year on risk controls and completely refreshed their management team. I think 80% or more turnover on that front.
Alright, let's do the next one.
Their business by selling or closing 13 businesses. It's not like they were just marching in place waiting for this to end.
But notice what you're doing. You're saying engaged in lots of activities.
Bubbly.
What I'm looking at is stop breaking the law. The point of engaging those activities is so you have appropriate safeguards in place so that you don't break the law. They get caught by the SEC, they get caught by the CFPB, they get caught by the OCC, the 3 big banking regulators breaking the law
Alright, that's done.
just
We do
in
the
last 9 months. Plus a report from
other giveaways in a little bit. I gotta pay them first.
We need oversight of all the banks, but particularly, we need oversight of Wells Fargo, because even when it's under this kind of scrutiny, it still has engaged in activities where it has broken the law and done so repeatedly. That's a real problem with a big financial institution. And look, the problem with the Fed governors, I want to be clear, every single one of them should be embarrassed, whether they're Democratic appointees or Republican appointees, and that's why I want to see the bank examination reports. Show your homework to the Bank Oversight Committee in confidence so that we can see the decision that you made and what went into that decision and what changes Wells actually made.
Is there a part of you, Senator, that would actually welcome a more robust competitor in credit cards or in wealth management or in commercial banking?
I would like to see a robust competitor who follows the law, yes. I think it is unfair to those who are in any business if they have to compete with people who cheat.
You say in your statement there's no evidence that it has changed. Have you engaged with the bank itself? Have you talked to management? Have you been inside of there?
I am open to speaking with anyone. But be clear about this. It is out there in public when they have broken the law, and their own employees and whistleblowers are saying they're engaging in the same activities that got them in trouble 7 years ago. I want to see how Fed arrived at its conclusion.
I guess I'm just wondering, I mean, from what I've been told, that you actually have not engaged with them. I mean, if you have such strong concerns about the management team, which is completely refreshed and has done a lot, I'm wondering why you won't meet with them.
I have expressed my concerns repeatedly and openly. And anyone who thinks I haven't expressed those concerns loudly enough, believe me, I am happy to repeat them again. Look, I'm open to meeting with anyone, but I don't want to hear a bunch of happy talk. I actually want to see the documents. I want to see what information was provided to the Fed that made the Fed, despite all of this public law-breaking activity, made the Fed to say, looks great, we're done here. I want to see what the Fed based that on.
Fed and a Fed-approved independent third party, I would also note.
Well, fine. Then what's the problem with sharing it with the people whose legal responsibility is oversight of the regulators who are making this decision? Just show me your homework.
While we have you, I'd love to get your thoughts on this new CPO score and Elon Musk's commentary about this abomination, as he called it, and whether or not that moves the needle for some Senate moderates.
You know what? You'd have to talk to the Senate moderates about what moves the needle for them. Right now, they seem to be fine with cutting health care access for 14 million Americans and cutting access to food and pairing that with tax breaks for billionaires and millionaires. And look, I'm pretty straightforward about this. I don't think any little tiny baby ought to have to go without health care so Jeff Bezos can buy a third yacht. But I do believe that billionaires ought to be paying their fair share, and that failure to do that is a problem in our national debt, and it's a problem with this budget that the Republicans are moving forward. And it's just interesting to watch all kinds of different people come out of the woodwork, including your previous guest, say, you can't keep doing this. You can't hand out those kind of cuts to billionaires and still sustain the economy. That's going to create a problem for everyone. And look, here on Capitol Hill, the Republicans can do whatever nonsense they want to do and pretend that this is not going to cost money. But the reality is, and the markets
Good. I'm just holding that last bag.
bringing in enough revenue to cover your expenses.
Yeah, let me do the Bonox now.
And the bond market is starting to show that. So I'm very concerned about what
668 is long ass way.
they can't get what's
It's okay,
where they
Evo.
want to be because they need
If we pump more, I'm
magic
gonna short
to be
on
able to
the
fix it.
funded
And
one.
you may be able to sell magic math on the floor of the United States Senate to the Republicans, but you can't sell magic math to the American people, and particularly to Wall Street and bond markets.
So
It just
Democrats
isn't
are
gonna work.
deficit hawks now?
No, that's not the point. The point is that you cannot cut health care in America so that billionaires can get more tax breaks. So Mark Zuckerberg can buy another Hawaiian island. And you particularly can't do it when the giveaways to the billionaires are so ginormous. That is going to blow a hole in the United States budget. And that's what people are telling you from the left, from the right, from the center, from people who don't even like politics. And the Republicans in Congress can deny that, but that is the reality on the ground outside that building.
Just to put a final point on the Wells Fargo and just regulating banks in general, Senator Warren, a lot of folks in the banking system will say, okay, mistakes have been made, but that the regulators are there. And actually what this is a really effective display of what it looks like to have pretty hardcore regulation that spans both Republican and Democrat administrations and also third-party regulators. And they're regulated on some of the issues you talked about as well that have happened since then. The question is, do you worry at all about the unintended consequences then of putting even more regulatory pressure on these banks, which are critical for our financial system, providing liquidity, providing loans? Do you want to see that in the hands of crypto firms
stocks or others that are less regulated?
I'm sorry, you're throwing a giant parade and tossing confetti over regulation that, let's see, what's happened in the last 9 months? Wells Fargo has been tagged for money laundering. It's been tagged for being engaged in consumer fraud, and it's been tagged for cheating its investors. Man, I don't know about you, but that doesn't sound like to me really tough oversight and a celebration of what a great job the oversight folks have done. They've caught Wells Fargo breaking the law over and over and over. And now everybody wants to celebrate that that's all behind us, and it'll be just fine to turn down the regulations on Wells Fargo. I just got to say, that makes no sense. But if the Fed has an argument to make here, then the Fed should release those banking examinations for 5 years to the banking committee and let us look at their homework.
Senator Elizabeth Warren, thank you for coming on with your take. We appreciate it for the time in Washington.
Big time watching some sectors this morning, especially the tech trade, the best performing sector since the start of Q2, up around 15% since April. Best performers in the space are Palantir and Broadcom, both up 50% since the beginning of the quarter. Also keep an eye on HPE, moving higher today, stocks off the initial highs, but that did follow the big earnings beat from last night. Speaking of which, do not miss a first on CNBC interview in the next hour with Antonio Neri of HPE. That's when Money Movers begins in just about 6 minutes.
Real-time exchange sector sort is sponsored by Sector Spider ETFs. It's Father's Day. Cook anything, anytime, anywhere. Only on a Blackstone, America's best-selling grill.
Wow, looks like your hiring's making a lot of people happy. ZipRecruiter's new tool, ZipIntro, is a game changer. It saved me so many steps in the hiring process. Look, I just pick a time and it handles everything, from finding great candidates to setting up interviews. So, no more back and forth. Right, I can just choose from this list and be within as soon as tomorrow. Oh, wow, another dignified portrait of me.
Intro. Post jobs today. Talk to qualified candidates tomorrow. Try it free. Only at ZipRecruiter.com/CNBC.
The average dog only goes to 10. That's 10 birthdays, 10 first summer swims, 10 annual camping trips. At the Farmer's Dog, we don't think that's long enough. That's why our freshly made food comes pre-portioned, just for your dog. With a dog at a healthy weight.
Disruptor 50 list revealed. The innovative company gathering boundaries, picking up industries, and changing the game for good. Special coverage begins Tuesday in Slotbox and streaming on CNBC Plus.
Dear Texas, at ATB, we partner with farmers around the world to bring you Cafe Au Lait, made from 100% Arabica beans. And from the world's finest coffee beans, we create blends in over 40 different flavors that Texans love. From whole and ground beans to single-serve cups, iced coffee, and cold brew. No matter how you drink your coffee, every time you take a sip, you'll know it was grown just for you. Cafe Au Lait, sourced around the world, brought to Texas with love from ATB.
Looking for the coolest kids furniture? Nobody has more than Rooms to Go Kids. With the largest selection of bunk beds, bookcase beds, upholstered beds, day beds, and storage beds. There's more ways to stay organized, more ways to work, and more ways to play. Which means more ways to let your kids be kids. And of course, more ways to help you save big with our unbeatable prices. If you need kids furniture, nothing beats Rooms to Go Kids. Stablecoin issuer Circle set to make its public debut this week, aiming for a valuation north of $6 billion, looking to raise $896 million in this IPO, which is actually up from the $624 million it was initially seeking.
The plan is to offer up to 32 million shares priced between $27 and $28 a piece. They'll be listed here on the NYSE under the ticker CRCL. And per the filing, Cathie Wood's ARK has indicated interest in purchasing up to 150 million of the shares. This would make Serpo one of the most prominent pure-play crypto companies to list on a U.S. exchange and a test of overall appetite of stablecoin as well. Jim Breyer's been a long-time investor. He's always loved this company.
Meantime, Money Movers is up after this. Don't go away.
CNBC Crypto World is sponsored by Crypto.com, trusted by over 100 million users worldwide.
He sure knows these parts well.
Looks like the planes whispered to him. Innovation changes everything.
That's good.
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more. Prospectus at Invesco.com.
My UTIs were a recurring thing.
Then we found support with Eucora. Eucora has UTI relief products and science-backed supplements that offer a proactive approach to urinary health. I finally feel free. Try today
Order
at
Bill.
Eucora.com.
No, I went back in the short. Yeah.
The daily health drink backed by
I didn't cancel the 755.
Order submitted.
Next
Just
gen
give
is
me 5 points, I'll
shown
get
to
out.
increase healthy gut bacteria by over 10 times. And to
And
promote
bot
nutrient
might
gains.
go long soon too. Man, I don't. It's messed up.
The next generation of AG1 is here.
Scam or a cyber thief transfers the title of your home out of your name and steals your hard-earned equity.
It's roughly 60 to 90 days for that person to even figure out that they're the victim of this crime. You start getting foreclosure notices, and you realize you've got 4 mortgages on your house that you didn't even know existed.
Unfortunately, it's on you to protect yourself. You might already be a victim. Check your title status now at HomeTitleLock.com.
4 Week has been on a unique and truly extraordinary journey as we build the infrastructure that allows artificial intelligence to achieve its potential. We have built what is one of the most amazing companies and will be one of the most foundational companies on how artificial intelligence is delivered to the world.
Yeah, my eval's gonna go bye-bye soon.
Michael Jordan's the only guy who can compare in terms of confidence. But with Steph Curry, there's brand value there, there's brand awareness.
Yeah, I had $200 left.
Only on CNBC.
Also, no, I didn't. I just went heavy on it.
Good morning, welcome to Money Movers. I'm Carl Kingston with Sarah Eisen on the Post 9 of the New York Stock Exchange.
I might get 100 something, $200 left. Let's let it go. One dump and that's gone and we'll go long. I don't feel like going long towards higher day, near higher day.
CEO Antonio Neri says there's more work
It's
to
not
do.
11
He's gonna
o'clock, so
join
it's
us
like
in a few
lunchtime
minutes to
chop.
explain.
Pipeline operator Williams set to restart 2 abandoned controversial Northeast gas lines. CEO Alan Armstrong is going to join us this hour as well.
Right now in the markets, it's another up day for Wall Street. The S&P 500 up 0.25%. So again, we have this pattern where we build gains through the morning. The Nasdaq's up 1/3 of 1%. That's because groups like communication services are leading us today. Technology is higher again. Healthcare is catching a bit, along with materials, and financials just go positive. Meta, Broadcom, Netflix, Apple. That's what's leading the charge. Broadcom has earnings coming tomorrow, and of course, big jobs day on Friday after weaker private sector jobs today.
Let's begin in Washington. The trade tensions, of course, between the U.S. and China. The president taking to Truth Social in the early hours of the morning, conveying his dismay with Chinese President Xi. Our Image Avers is outside the White House watching that amen, the CBO score. Speaker Johnson trying to get a hold of Elon Musk.
A lot going on, Carl. Let's start with the president. President Trump expressing some frustration in the wee hours last night with the way trade negotiations are going with China. In that social media post at 2:17 a.m., the president wrote, "I like President Xi of China, always have and always will, but he is very tough and extremely hard to make a deal with." So with the president sort of venting and lamenting on social media, It does feel like negotiations are in something of a cul-de-sac this week. The White House has suggested that Trump and Xi Jinping would have a call this week. So far, at least, no indication that that call is on the schedule.
I think
And
bot
Tuesday,
just went
U.S.
long.
Ambassador David Perdue
Yeah,
met
bot
with
just
Chinese
went
Foreign
long.
Minister Wang Yi in Beijing, after which the Chinese side released a statement saying
Yeah, I
that
should have
they
just switched
should
to
get
long earlier.
bilateral relations back on the right track. The Chinese statement also called U.S. action since the Geneva talks earlier this year, quote, regrettable. And in a statement on social media, Ambassador Perdue said in that meeting, he emphasized President Trump's priorities on trade, fentanyl, and illegal immigration. And guys, the White House said, we shouldn't make too much of the fact that the president was on social media in the 2 a.m. hour this morning. They say he's usually up late working and up early working, and that's just par for the course here. Back over to you guys.
Yeah, like the rest of us on social media at 2 a.m. sometimes. Unfortunately.
At 2 a.m. It could be dangerous.
So what do we know
Yeah,
about
looks
what's
like it's gonna go up
in
more.
U.S.-China? Did the Geneva
Might cut this
talks
one.
set in place some sort of schedule or timeline of events?
Well, we don't know what's next. I mean, the president has imposed his timeline. He's looking to get this call with Xi Jinping. That may get scheduled. We'll see. Today's only Wednesday, so there is time for them to do that. The question is, who has the incentive to come to the table here? Do the Chinese look at President Trump's social media posts and say, you know what, this president wants a deal more than we do. Let's let him dangle. Or do the Chinese look at the absence of access to U.S. markets as, fatal and internally destabilizing, which is important for them in Beijing? They don't like anything historically that could cause any kind of internal disruption or destabilization of political and economic control. So the question is, who has the higher tolerance for pain right now? And politically, you might think, well, that's the Chinese side because their system doesn't operate with as much political feedback as the U.S. side does. But we'll see how it shakes out.
Eamon, appreciate that. Eamon Jabbers watching the White House side today. Meantime, we are watching Congress. Speaker Johnson speaking and this new CBO score. Let's get to Emily Wilkins with a news alert. Hey, Emily.
Hey, Carl. Yeah, Speaker Mike Johnson just addressed reporters, and he said that he had spoken with Elon Musk earlier this week, felt like they were on the same page about that Trump mega bill, and that he was surprised to see Musk's tweets yesterday. He said that Musk did a 180. Listen to what he said about that interaction.
Order
I
canceled.
talk to President Trump, all the time, multiple times a day.
Order submitted.
Obviously, we've talked about this. As you know, he's not delighted that Elon did a 180 on that.
And so Speaker Johnson did say that he called Elon Musk last night. He wasn't able to get a hold of him, but does hope that he will be able to speak with Musk a bit today. Obviously, he has a very fragile majority, very narrow majority that he has to keep in line here in order to get this bill over the finish line. Potentially complicating that, of course, is the official cost that this bill is going to add to the debt. The House bill that was passed a few weeks ago, we have the official score from the Congressional Budget Office, $2.4 trillion. That was actually a little less than we've seen a number of estimates come out on.
Dang,
It is still adding to the debt. Speaker Johnson, of course, and other GOP leaders say this doesn't fully take into effect the benefit that tax cuts could have on the economy, and we are expecting additional data and scoring on that, but expect this to become a real point of tension as the Senate takes up the bill, especially given there are a number of senators that want to make changes that would ultimately raise the cost and raise how much this bill would add to the debt. Guys?
There's the deficit impact, Emily. The other number that's getting picked up out of the CBO report is the number of people who will be uninsured by 2034, an additional almost 11 million Americans.
And Carl, expect that number to really be something that you hear the Democrats begin to pound on. Expect it to be something that might be brought up by, say, Susan Collins, Lisa Murkowski, Josh Hawley, the senators who have really had concerns about Medicaid removing people. They're open to work requirements, of course. That's something Republicans agree on. But they're worried that some of the ideas in the House bills on co-pays, might wind up leading to fewer people being insured or being able to get the coverage that they need. So definitely a few things to keep a very close eye on as this bill goes through the Senate. Senators will be meeting on the bill over the next week. A group of them are heading to the White House today to meet with Trump, and we're definitely expecting some changes from what the House bill put forward. I think the big question is that for those changes, are they actually going to be able to pass into the House? You're already seeing some back and forth on those state and local deductions, the SALT cap. You saw Majority Leader John Thune come to the Senate floor and say that he's expecting some negotiations over those. Immediate pushback, of course, from the House and from New York Republicans who say that they would not be able to support a bill with a lower cap. So lots of negotiations here in Congress, and of course, we're expecting this for the next couple weeks as lawmakers race toward that stated July 4th deadline. Yeah, also AI regulation becoming a sort of hot button issue inside as well as the bill aims to take it away from the states and put it into the federal government. Thank you, Emily. We'll see how this moves through Congress. Emily Wilkins, sticking with DC in that budget bill, the CBO score, it's an issue that Ray Dalio sounded the alarm on last hour. Have a listen.
It's like being on a ship in which everybody agrees that if you don't turn a course, and whether you go left or right, if you have this, don't get to the 3%, you're probably going to hit the rocks. And what you have is a political conflict about arguing over how to cut the debt, how to cut the deficit and do it. And this chance is passing us by.
So it sounds like you would like to see the Fed actually lower interest rates because the interest on that debt is so much and has gotten to such high levels, more than defense spending. Is that something that would help?
You can't unnaturally lower interest rates without a negative consequence. Think of it this way. A bondholder wants a certain interest rate, and that's measured by the real interest rate. And if you artificially lower the interest rate, then what you're going to have is the problem that it's a worse asset to hold. And that can be a problem. But if you change the supply-demand picture the way I'm describing to lower the interest rate, then that's a healthy way of lowering the interest rate. You don't get richer by lowering interest rates or printing money. So you have to deal with this in a balanced way.
All of which is to say that he says that there's urgency to be cutting debt to 3%, the deficit to 3% of GDP, which is more than half of where it is right now. Dalio also said that equity valuations remain high relative to bonds, that gold is a good diversifier. Right now, we're in a period of higher risk than normal. Let's bring in CNBC senior markets commentator Mike Santoli. I do feel like the market has been grappling with this idea of how urgent this sort of looming crisis is that we're hearing about now. The fact that the 30-year yield went past 5%, the fact that we're getting this bill now scored to add to the deficit. Is that ultimately an issue for bond and equity markets right now?
I struggle to look at the current level of yields relative to nominal GDP, the shape of the yield curve, the spread over Fed funds, or any of these things that you would say that it's the market saying it's a fiscal emergency and say, yes, the market is really alarmed right now. It really is.
Submitted.
I mean, 5% of 30s. Right. This is the thing. So it reminds me of, the doomsday clock, like how close are we to nuclear annihilation? It's sort of 1947 at 7 minutes to midnight. And now it's like a minute and a half to midnight, 70 years later. So my point is just that, we kind of think that things are not getting better on that front. The markets are intermittently getting twitchy about it, but they're not imposing some kind of discipline or saying things are really out of whack. You would prefer it if real 30-year yields weren't at 17-year highs. I guess so, but it always comes down to 17-year highs. Take me back to the 90s and tell me the environment we were in when we had a surplus and you didn't have appreciably lower real yields. So I guess my point is there's no perfect right or wrong level. I do think it's something on investors' minds. I try to look at it through the market's eyes. What they're seeing in this budget package is mostly no additional fiscal restraint, no real change in the trajectory. It's not like it's, oh no, it blows out the deficit way more than we expected or way more than we were prepared for. And what's interesting about it is if the Republicans want to say, well, you can't talk about the incremental deficit impacts because we were never going to go back to the old tax rates, right? This expiring tax rate. We shouldn't compare it with what would have happened if we went back to 2016 level of tax rate. That's true. But that also means you're not going to get the growth benefit from just extending tax rates as they are right now.
Anyone trading but me?
We're going to go from the assumption of 1.8% real growth to 3% just because we kept the rates the way they were.
Oh, you're still trying to my funded futures, right? You're still trading at my funded futures, the 150K?
Orders submitted. Right? No tax on tips and a lot of those things. Nobody thinks they're going to be revoked in 4 years, right? Because the political realities are you don't take away tax cuts. So we'll see if that actually comes to pass. I think the market is not mostly preoccupied with the fiscal situation. I think the market is mostly saying the economy, maybe we're seeing a little bit of softness here and we have to be on alert for that. But for the moment, we don't have to be too scared because AI is working and the consumer hasn't completely failed yet. And meanwhile, if we're on this self-imposed clock for some kind of deals on trade, then what you're going to have to define as a deal is going to be so minimal and just kind of be equivalent to a walk back of tariffs that the market can live with it. Now, that's a lot that has to go right along all those fronts continually to keep the market higher here. I think mostly what the market is showing you is that people felt like they weren't invested enough. We got a better than expected recovery in this market, and they keep having to buy. The market's not coming in for that.
Well, what else is working right now is you're getting a little bit of softening of data, not to alarming recessionary levels, but to levels where the Federal Reserve could think maybe the employment side is more important on our mandate right now because inflation is coming down, yields are behaved because of it. That's pretty helpful.
Everything has definitely moved in that direction. I agree with that. And by the way,
Orders submitted.
Look at where yields have come down to on a couple of soft data points this morning. Right? That's not like
Yeah,
the
it's a
market
tough
saying,
day for everybody.
because we can't service the debt in the future. You know what I mean? It's still the cyclical effects are still being imposed on the treasury.
Yeah, I've seen a lot of Discord people complaining.
I disagree with you about the stimulative impact of the tax cuts because what we hear from CEOs is we want to get that clarity. We need that clarity for planning, and we want lower rates.
I mean, maybe so. I just can't imagine that there are boards of directors who are saying, well, we have to hold off on this project because we really think corporate tax rate is going to go back to where it was in January 1st, 2017.
Maybe not a hold off, but it's good to have, good to know.
It's not going to hurt, but to me, it's not going to give you some kind of really like this massive new sweep of incentives that's going to accelerate economic activity. I just don't know how that math could work.
Mike, thanks. Mike Sanzoli. Let's turn to Wells Fargo this morning. Getting a slight boost after the Fed does announce it will end the company's 7-year-long asset cap restriction. We talked to Wells Fargo CEO Charlie Sharp earlier this morning, and he did tout future growth prospects for the company given that decision.
I think about in terms of what the right thing to do is for the company and for our shareholders and our communities, which is, first of all, this is not the kind of environment where you're going to go out guns blazing on anything. I think about it in terms of, what are the business opportunities and what's the smart way to go about growing. And so what I've said is there's no light switch that's going to go off today versus yesterday, that we look at things in terms of our opportunities are much more linear in terms of how we'll grow and our level of aggressiveness as opposed to exponential. But remember, yesterday, that was a line that was flat. We weren't able to actually grow linearly, and now we can.
Joining us this morning, RBC's Gerard Cassidy. Gerard, good to see you. Kind of an important day for Wells. I wonder what you make of it and whether or not their competitors do need to be worried.
Carl, it's a big day for Wells. It's a long time in coming. Many of us were expecting this asset cap to be lifted this year, and obviously it was lifted yesterday, as you just heard from the CEO, Charlie Sharp. And it is going to be now a point where
that feed fixed and talk to Gerard in a moment. Obviously, huge for maybe certain business lines. We tried to pin Charlie down on whether this would be a credit card growth story, a wealth management growth story, maybe a commercial banking growth story, which I think Kramer was particularly interested in. But right now, given our conversation with Elizabeth Warren, you can't blame Charlie for trying to resist the temptation to, as I asked, go out guns blazing.
And I'll just note that it's not fully over. I mean, part one is over of ending the consent order, but there is a phase two where they do have to sort of keep it going and make it more sustainable for it to be completely removed and off. So there is still, you know, a little bit there. But I think the bottom line, Carl, is it's a growth story, and they have been held back on growth. And if you look at some of the estimates, I mentioned in the conversation with the senator, $9 billion in earnings a year they lost out on. That was the Bloomberg estimate. I think Charlie also cited one of the Wall Street Journal.
Yeah, the sacrifice on deposits.
On deposits, and just how much other banks and competitors like a PNC, for instance, have grown in that period. We're talking 30, 40%. So it really did. We asked Michael Santomassimo, the CFO, about it every single quarter. He had no update. I think they'll be thrilled we don't have to ask him about it.
Gerard, I think we have you back. Can we start over and talk about what it means for Wells in the competition?
Sure, Carl. It's certainly a big day for Wells. You know, they should be very proud of all the hard work they did to finally have this asset cap lifted. The cease and desist order is still in place, but they'll get that lifted as well at some point in the future. And what it means for Wells, of course, is you mentioned with Charlie Scharf, their CEO, they're going to finally now be able to grow. The company's had to hold its place. One of the, I don't know if they would say this is a silver lining from the asset cap, their deposit base during this period, even though it's called an asset cap, was really a deposit cap. And the deposit base now, they've got one of the best consumer deposit bases as a result of this asset cap, as they have to garner more consumer deposits at the expense of wholesale deposits. But now they'll be able to grow. The two areas we think they'll grow is their capital markets investment banking business. They've been growing that nicely. Now they'll be able to grow that even better. And then we think on the consumer lending side, they've been building out their credit card portfolio. We see that. From a deposit competition standpoint, certainly there'll be more competition for all banks, not just the regional banks. But I think what we'll see is that we get economic growth, which leads to loan growth. This is counterintuitive, but to drive deposit growth, you need bank loan growth. So loan growth will help deposit growth for everybody, including Wells.
Gerard, we'll keep it brief. Lost some time there on the reshuffle tech-wise, but we'll talk soon. Gerard Gassini on the WFD for WS.
Still to come this hour, the CEO of HPE is with us after reporting a beat across the board today, raising the floor of its profit outlook as well, thanks to some tariff exemption. Stocks reacting well.
The gas company Williams set to revive this controversial pipeline project based in New York State. Pretty big deal. CEO is going to join us later this hour with his response to some of that backlash. So stay with us.
Retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track. Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement. 13 retirement blunders to avoid and maximize your Social Security. Call 1-800-759-4477. Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better. Call now for your Comfortable Retirement Kit. Call 1-800-759-4477. Call us today. You don't have it coming to you unless you plan for it. If your portfolio is $1 million or more, call 1-800-759-4477. Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Imagine a living room with the power to change everything. The Modular 2 have rooms to go. Now with even more possibilities, like this sleek, super soft leather. It's one collection that gives you the power to relax, the power to recharge, the power to create the perfect sectional for any space. Just choose your pieces and transform your room easily and efficiently. I'm Julianne Huff, and this is what's possible with the Modular 2 and rooms to go.
I'm about to pick now. Let me get out of this position real quick. Let me get out of this short. Come on. Oh. I just want to get home.
For something more special. Because sometimes the best seats aren't in the house.
I'll do that.
2025 Mitsubishi
Let me pick this one.
Premium Concert South, a world-class venue wherever your journey takes you.
And there is Forex Town.
You mean Renton?
Let me check your minutes.
Yeah, the Renton.
But you're saying Rentfin. It's Redfin.
I don't say Renton. Listen, Renton.
Okay, so the sound that your mouth is making?
Yeah.
Is it red or rent?
Red. Yeah.
Okay, so say
Huh?
Redfin.
Renton.
Redfin.
Renton.
Redfin.
Oh, his points.
Redfin. Redfin.
Welcome back to Money Movers. Take a look at shares of HPE, Hewlett Packard Enterprise, getting a boost, but off initial highs after the company reported a beat.
Oh, you got enough. You got 10 points. Congrats.
Back on revenue guidance for the full year, despite a boost in profit expectations. Joining us now, first on CNBC is HPE CEO Antonio Neri. Antonio, welcome back. It's good to have you. So, what did we learn about demand and growth for AI servers?
Well, good morning, Sarah. Thank you for having me again. Look, we had a very solid quarter, and that was driven by demand across the entire portfolio. This was the 5th consecutive quarter of year-over-year revenue growth, and every product segment grew. Obviously, AI continued to be very strong, and the demand is now strong also in enterprise because of the bookings we realized in Q2. 1/3 came from enterprise, which is very telling in terms of adoption and acceleration in that segment. But it's true also in sovereign, and it's true also in the traditional service provider segment and the model builders. But despite that, I'm very pleased about the progress we made in our server business overall. We put behind us the challenges we had in Q1 in inventory and cost management, and that's why I'm very confident to exit the year at 10% operating margin. And then in networking, this was the 3rd consecutive quarter of growth in orders, and we returned to annual revenue growth as well. So we have seen solid demand across the entire portfolio, not just in AI.
I was
So
trying
you
to
just mentioned the enterprise growth, a third of all AI orders. I think you said what
Let me get
what are
the Apex guy
Are we
in.
starting to really see them use it in more volume?
Well, they are starting now deploying infrastructure against the use cases that they have been working and testing for some time. I give you an example across our own company. We have been working over 250 use cases, more than 40 already in production. And that takes a little bit of time to understand that return on investment, what type of infrastructure you want to deploy and where, and how you get your data prepared. And so now customers are moving from proof of concept into production deployment, and therefore many of them are deciding to put that on premises because of governance or data compliance issues and the like. And we see that across multiple segments of the market and verticals. So this is very encouraging because we have a terrific offer that we co-engineer with NVIDIA, which is our private cloud AI solution, plus all our server and storage offerings as well.
What about margins, Antonio? That's always been an issue for companies like yours and Dell, and whether the growth is coming at the expense of margins. It sounds like analysts were impressed that you were able to prioritize profit in the AI market this quarter. How are you doing that, and how does it distinguish you from your competitors?
Well, as we discussed before, Sarah, we have a unique set of capabilities and intellectual property, both at the architectural level and as well as the manufacturing level. And ultimately, it's a balanced approach between revenue growth and profit expansion. And that's why we are very confident to raise the bottom end of our range by 8 cents, because we have line of sight on what comes next from an AI revenue conversion, as well as the rest of our business. But we are very committed and very excited to return to that 10% operating margin for the year. And then you have to really work hard on your working capital. So it's a balance of margins and margin operating profit margins. And then on the other one is the working capital, because some of the systems, in fact, we are completing one of the largest deployments in the GB200 LVL72 right now. you have a long time between the inventory purchases and the revenue recognition, so you have to be very disciplined on that.
All right, is that lag going to compress over time, Antonio, before the money starts showing itself?
It depends, Carl, on the segment. In enterprise, it's very quick. You know, look, the moment you place an order, when you deliver, it may take a few weeks. In the large deployments, it may be months, right? And so sometimes it may overlap a year to the other one because of the payments and receivables. But the reality depends on the deployment. You know, sovereign tend to be also very large. We're talking about sometimes deployments of 20,000 GPUs at a time. So that takes time to, you know, bring the inventory in, build it, ship it, install it, and then make it productive, because that's how you recognize revenue.
Right. Also, Antonio, we did get some construction spending numbers for the economy in aggregate, and one of the carve-outs was data center, which did show some deceleration. Is there something wrong with that picture? Does it sort of fly in the face with the guidance we're getting about CapEx?
I don't think so, Carl. I think people have become smarter about how to deploy that CapEx and the productivity of these AI clusters, and how you use it. But it's still an astronomical number, right? When you think about build-outs, power, cooling, and the like. So I will not read too much into that. Obviously, you have to digest. You know, there's so much time to digest all of this. But I can tell you the demand for accelerated computing continues to grow. And it's not just the size of it, but also the number of customers. And we believe HPE is in a unique position, particularly in the sovereign space. Last week I was in Europe and I met a number of customers where they see us not only as a supercomputing provider, but also an AI factory provider because of their deep expertise in building these very large data centers.
Yeah, that's why we've been talking more and more about that theme of sovereign AI. Antonio, thank you for joining us with some added color there. How about your seeing? Antonio Neri, HPE CEO.
When we come back, NVIDIA's great investor flip, a group of investors ditching the name as another piles in. We'll look at that change in sentiment when Money Movers continues.
And watching Tesla shares under pressure, reports of continued sales declines weighing on the stock, plus regulators looking at the limits of its full self-driving promise. That's later in the hour. Don't go anywhere.
Order filled.
Ooh, got out. Let's go.
Introducing AG1 Next Gen.
Yeah.
The daily
I'm just happy to get out.
backed by 4 rigorously designed clinical trials.
Let it drop, baby.
Next Gen is clinically shown to increase healthy gut bacteria by over 10 times and to close common nutrient gaps. It's one drink for whole body health. The next generation of AG1 is here.
Some people doing things the hard way, like doing their finances with a spreadsheet instead of using Quicken. Quicken pulls all your financial info together in one place and updates it automatically. How easy is that? Welcome to the place where people go to learn about their Medicare options before they're on Medicare.
Come on in. Turning 65 soon. You're retiring at 67.
That's the plan.
Well, you come to the right place.
AARP Medicare Supplement Insurance Plan from United Healthcare. And how a plan like this helps you take charge of your healthcare with lower
Should
out-of-pocket
I
costs.
message
Here's why.
Tick? Ask for my codes.
Pay for everything.
I want to give it up next
Your
week.
deductibles and copays could add up to
Bug 'em
hundreds,
again.
even thousands of dollars a year.
Everyone's a little surprised to learn that one.
Medicare Supplement Plan helps pay some of what Medicare doesn't.
No. I sent them a message. They said they're okay with extending what we did last month. So I'm just waiting on the codes. I sent them the graphics. Let me show you what it looks like. Yeah, that's pretty good. 350K straight to fund and 100K. It's like $4. That's like $1,000. Yeah.
If you're turning 65 soon or over 65 and
No, that's straight to funding. They only do straight to fund. They're known for straight to funding. Yeah, you don't want to spend money on eval, just straight to funding for them.
Take charge of your healthcare. Call United Healthcare for your free decision guide. And learn more about lowering your out-of-pocket Medicare costs. And see any doctor who accepts Medicare patients.
My hair has gotten so much thicker ever since taking this.
I used to have a probiotic, a green juice that replaced it all with this Arma colostrum.
Gotta take it.
First thing I noticed was the energy and recovery that it had to work out. I wanted to try it. Try Arma.com.
Michael Jordan's the only guy who can compare.
What up, Gambit?
When you're Steph Curry, there's
You alright?
there's brand awareness. Curry games, business of Steph Curry.
Yeah, I blew my eval too on that short. That's okay, man. I'm barely green while I'm funded.
The new streaming platform from the #1 source in business news. Watch live or on demand. Any market, anytime.
Can't really trading much.
Go to cnbc.com/plus now.
Yeah, you went too heavy. That short was bad.
Christina Bartz-Nevelos is following that this morning. Morning, Christina.
Good morning, Kyle. Well, despite blown
Yeah.
earnings and a 24% rally just over the last month, retail traders have been dumping
The
shares.
day you
of
follow the
Nvidia.
bot, you got right. And the day you don't follow is up 400 points.
The last 21 trading days.
Yeah, today the long is bad, the short is bad. But the long is only up at most 10 points, so that's pretty
You
bad.
can see just really on the right side of your screen, it's the sharpest drop in just the last 3 years. And only just yesterday, when
Yeah.
Nvidia became the most valuable company in the
Guess we
world,
shouldn't play right after news.
back to buying Nvidia, although only a mere $35 million for the day, according to Vanda Research. So the swing is really just stark. Retail investors,
Yeah, I follow bot most of the time.
2023 hyper growth wave are now bailing.
Yeah, I took that one. I took a blown. See, what I do is on my eval, I follow straight in, and then with my funded, I wait for like a pullback in case I miss. You know, sometimes the bot's short or long and it goes all the way. Yeah. So. Oh.
Meanwhile, institutional investors who reduced tech exposure during April.
Oh, 3 NQ on a 25K? No. Yeah. That's easy. That's way too big. Even 50K is too big.
Nvidia's second
Yep.
half, though, the setup's fantastic, and that's why investors on the institutional side are getting in. The divergence, though, signals a market evolution as Nvidia transitions from hypergrowth to steady growth, with much AI upside already somewhat priced in. Some can debate that. Institutional capital increasingly drives today's price
I had to
discovery.
average
Retail
down to get
selling
out,
straight
but
may
mine
now
was just
serve as more of a
MAQ.
contrarian indicator for institutional buying opportunities rather than the bearish signals that we're so used to seeing for stock performance. Sarah? Okay, Christina, thank you very much. Nvidia flat today, but it's had a nice run. We've got a news alert now out of Washington. Let's get back to Megan Casella. Megan. Hey guys, good morning. The Congressional Budget Office has a second analysis out this morning, this time taking a look at President Trump's tariffs. And just a logistical note here, this was done before the most recent court rulings, but after the China trade truce. So this is looking at the economic effects if those China tariffs are at 30% and everything else that we know.
I was dropping.
What CBO found
Oh, well.
is that inflation will
Thank
increase
you,
by
was
an average
dropping.
of 0.4 percentage points in
Sure.
each of the next 2 years. They also say on net,
Yeah.
inflation-adjusted economic output will fall. Tariffs and retaliation will reduce the size of the U.S. economy. But taking all of that into account, guys, the top line here is that tariffs will reduce total federal deficits by $2.8 trillion over the next 10 years.
Looks like it's
They
going to
reflect
drop
increases
on
in
3
tariff
minutes, so
collections and the revenue there, as well as reduced federal spending on interest and that smaller size of the U.S. economy. So in total, that's $2.8 trillion saved for the deficit over 10
put a
years.
short
Guys, I also
in
want to
at
emphasize this is completely separate from the
Order
analysis that we were
submitted.
talking about this morning on President Trump's big, beautiful bill that they said would cost $2.4 trillion.
Yeah,
So
it's 77.
completely separate numbers here, but they do almost cancel each other out when you take a look at both in terms of one with the added cost and one with the added revenue. Guys,
You may not have this, Megan, but do you know what number they're using on an average tariff rate?
I don't have the average tariff rate in front of me. But I do know that China being the biggest one, they do have that one reflected at 30%, not at 145%. So fairly up to date in that regard. And this, of course, would also include all of the fentanyl tariffs and most of those reciprocal tariffs being on pause except for the 10% baseline. So it's everything that they say was in place.
Oh, Gambit, go on the stream and type Bugatti so you can get into that Tradify account. Yeah, it's a 50K event. It's something. I just started at the Bonox just got done. Yeah, my stream.
Shrinking. I haven't seen if they put specific numbers on GDP in here, but they say there will be reduced economic output not only because of the U.S. tariffs, but actually
I don't think so.
So everything gets reduced by a little bit. That's part of why the deficit
They
impact
made a 90-something thousand on a live account on Tradify. He is, but also a gambler.
Some controversy though, that's coming up in just a moment. Crypto Watch is sponsored by Crypto.com.
Yeah. You gotta invest a lot of money, like cost 15,000 to make 20,000. So you need money to make money.
It's so good for your gut health. They used to have
Yeah, if you strat it correctly, but if you messed up one time, that's 15K down the drain, you know?
so much thicker ever since taking it.
Yeah, I've seen some people, they spend like 20,000, they say, oh, I made 40,000, and next month they spend another 20,000, they lost the whole 20,000. Yeah.
Okay,
Yeah.
the pros trust most. With over 500,000 new listings every month, you can find the one today.
Yeah, they go heavy on it, do like 5 to 10K every
You
time.
better put a key ring on it.
Oh, we got 9 minutes for the giveaway.
Almost took that away. With Dexcom G7, she's learned so much about managing her diabetes that she's able to do cross country this year. I think she can do anything.
Well, no, I can't.
Life insurance is a wonderful asset, but what happens when you no longer need it or you can't afford it any longer? Meet Tom and Susan. They chose to sell their policy for $200,000 cash. Now they're sailing through retirement.
Everything's green except for one eval. That's it.
You may be able to sell it for cash. Get an instant estimate at ovidlife.com or scan the QR code on your screen or call 1-800-502-0100. That's 1-800-502-0100.
For plant-based, healthy blood pressure.
Yeah, it looks like a lot of people did bad today, though. There's that dump on that news. A lot of people did bad today. They blew up their account. But that dump was massive, and then people chased a short like we did, and then it pumped like crazy too.
Switch from big wireless to
Yeah.
save your money for extra rounds of golf and great coverage wherever you play.
Nice read, Fred.
Thanks, Ted.
Ted and Fred. That sounds nice, doesn't it?
I kind of prefer Fred and Ted.
Oh, yeah, too late.
At least you didn't totally
Already had
blow
insurance
everything, man.
credit.
Save your green for the greens. See how we can cut your bill. Call Consumer Cellular.
It can be hard when the ones who cared for you need care. So whether it's a caregiver at home or support at a senior living community, theNewCare.com makes it easier to
Yeah.
find the right fit.
That's what a lot of people, they have backups. You know, like how you have 5 Pro, right? You keep buying more and keep trading it, and it stays sitting there in case you blow. Yeah. Yeah, if you, yeah, that's why copy trading, it can be useful, but then if you blow a lot. Yeah, imagine you did fun and all of them would be gone earlier. That's true.
There has to be drama.
What's the other one close to payout? The one, the second one?
Makes us us.
Welcome back. Let's turn to energy this morning. The Trump administration taking a lighter regulatory approach, as you know, to the sector. Companies like Williams are starting to capitalize, reviving two previously canceled nat gas pipeline projects in the Northeast, both expected to be finished by late 27. Joining us this morning first on CNBC is Williams CEO Alan Armstrong. Williams, as you know, handles roughly a third of all nat gas in the country, oversees 33,000 miles of pipe. Alan, it's great to have you back. A lot of people wonder how long you've been thinking about
I kind of messed up. I didn't know. I forgot about the data, so I had it short, and then the data dumped, and then like 400. It's like, I'm out.
The facts.
I was, yeah. I had like 6 of them, but I forgot all about the little, yeah.
Those facts are really starting to overwhelm politics.
It wasn't a dump at 9. It was a one at 7:15, I think, or 7:30.
Focused on eliminating
Oh, you're up.
access to low-cost natural gas, which, you know, from our
Yeah.
perspective is a little bit short.
Yeah, it was towards higher day. That's when I shorted.
Natural gas in those markets actually lowers emissions and pretty dramatically. And we're seeing that those facts are coming through. And as well, a lot of economic development is now hinging on whether or not states have access to low-cost natural gas. And we're seeing that in a very strong manner. In fact, the New York ISO itself came out here last
short's
week
about
in
to
their
hit.
power trends report and calling on the need for more
77.
in that market and more power generation because they have
I'll let it hit.
4.4 gigawatts of requests for incremental power generation.
It's just chopping now.
So it's not just for replacing fuel oil in those markets like our Nessie project would do, but it's also providing natural gas for power generation that's desperately needed to back up and make sure that there's adequate power to drive economic development in those regions.
Yeah. Our viewers are starting to get familiar
The
with
eval, or what is it?
is worth and what it means to overall activity. Will you have to make
Oh.
changes to any kind of prior efforts?
I was thinking you'll get the eval and get one day
Sure,
done.
You know, we will certainly work with the state of New York. I will tell you that, you know, last time around.
Oh, you're trying to get
the
some payout.
projects, from our perspective, were very much just driven by pure politics. There was nothing environmentally.
What the hell was that drop? What the?
that we were doing. We always
And it almost hit my short too. Oh wow, it's gotta be some news.
politics last time. But we certainly will work with the state of New York in making sure
What the
that
fuck was that?
we're addressing any and all concerns, just like we always do.
What's the economic impact of this?
You know, it's pretty large if you think about.
Yeah, I don't see anything.
The Nessie project, which is the Northeast Supply Enhancement Project that loops an existing pipeline that goes across New York Harbor into Long Island. That project alone would lower
Good job, mini trader.
by $2,300, typical residential customer by $2,300 a year, and it would save a.
I was waiting for 775 to hit. Man. Oh well.
Now, a lot of that is people being able to get off of fuel oil or electric heat and be able to use natural gas. Almost all of that actually is fuel oil replacement. So that's where the primary benefit comes to that. But it's also about 5,000 jobs, huge improvement in reliability, which is, from my perspective, one of the most important things that's available. And that region has been seeing dramatic price spikes during the winter months. In fact,
It's coming back up again.
on an average heating month now, price spikes have increased.
A big move is coming. Let me show you this screenshot. I think it's gonna go up. I just don't know. On the screens, it looked like it's gonna go up. Like a big move is coming.
Not even thinking about being able to drive the economic development opportunities that
I'm not 100% sure, so
would
we'll
help
see.
the Micron facility that would be a chip producer up near Syracuse. That is an enormous.
I just canceled my short and tried a long way.
Order
Yeah,
canceled.
I'm gonna cancel my short.
I think natural gas fired generation will be the preferred solution.
Yeah, we had a lot of those announcements last year. Micron was a big one, and it needs to be powered by something. We'll keep a close eye on it. Please come back and keep us updated, Alan. Good to see you.
Great. Thank you very much.
Coming up after a break, an inside look at Steph Curry's business empire. That's next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools,
Texas?
including over 400 technical studies.
Oh,
Tailor the platform
that's
to
good
your needs
commission.
with nearly endless
Huge.
customization, and track market trends with up-to-the-minute news and insights.
Yeah. Is it 3% or 6% for the commission?
Nothing's better than cooking on a black stove.
Did I sell it?
Your family will have breakfast, lunch,
Yeah, yeah.
dinner you create with an enormous variety.
So that's 60K was 3%. That's good.
Anywhere, only on a black stove. Go to your nearest black stove retailer.
Yeah, you give 1% back to the seller or the buyer, then that's a lot of money giving back. 1% is a lot. You know, Indians are cheap though.
And with so many options, she's bound to find effective.
Vietnamese people like that too. No, I don't really care for that.
Policy is an asset that you can sell. Hi, I'm Jay Jackson. I'm the CEO of Abacus Life, and for almost 20 years, we've been purchasing life insurance policies from seniors just like you. In fact, you can use the free policy value calculator at abacuspays.com, and in just seconds, you can learn what your policy might be worth. The premiums
Okay, 10 seconds. I'll pick the winner.
and for more than we expected. For many of my clients, selling their life insurance to Abacus was right for them and their estate plan. Selling your life insurance policy can be a safe, smart choice for many seniors. Don't sell or lapse your policy before going to abacuspays.com or calling 1-800-900-PAYS to learn what the fair market value of your policy might be. There are no fees and no obligations, just information. Get real value from your life insurance when you need it with Abacus.
Waiting till Friday to get paid is tricky. Then I heard about Charm. Now I get paid 2 days early, no fees. I'm a musician.
Yeah, Lucid right now is 40% off on everything. Too bad you can't trade Lucid because you don't know how to use the platform. Yeah.
One of my favorite supplements is Cunol turmeric.
Yeah, they might get Tradeovate or Project X. Once they do, they're gonna blow up like crazy. Yeah. Oh shit! If you do, and they do need to hire somebody, I'll talk to AJ. Actually, I'll talk to him right now. Oh, let me get the winner. Let me pick the winner first. AJ's pretty cool. Okay, someone won. Who is this guy? At NQ.
Your portfolio this week on
Let me check his points.
Four-time NBA champion Steph Curry has dazzled fans on the court, earning his place as the greatest three-point shooter of all time. But off the court, he's building an equally impressive legacy through his business venture, 30 Inc. CNBC got an exclusive look at the business behind Curry, and he shared how he hopes to be remembered.
To me, I feel like legacy is more. One, like if you watched the players, you felt a certain type of way. You felt inspired. You felt like you had, you were entertained. You were able to create memories.
Yeah, you got 11 points. Congrats, man.
A certain game, a certain shot, a certain championship, whatever happened, like you remember where it was.
The basketball part is the greatest shooter of all time.
Oh, the guy that got that one to Tradeify.
I think his unique style. He's an artist, really. He brought a completely different mindset to the game, to shooting. But I think his authenticity, his joy, his perspective, his
Tradeify? Oh yeah, because it was straight to fun there.
the combination of all that is so unique. I've never seen anybody like him, and I think that will live on.
He represented the Bay. That is life's work, but I do appreciate the compliment of what we're doing. Like
even in the city, town of Oakland, through our foundation, like those opportunities to impact people in a different way. I appreciate that feedback more than great game out there. So that's important. Like getting everything I can out of basketball, but I want it to be bigger. I could have dropped this. All of these realities are wild to me. And sometimes you gotta get out your own way and just enjoy it.
Curry Inc., the business of Steph Curry premieres tonight, 9 p.m. Eastern and Pacific, right here on CNBC. You don't want to miss it. You've traveled with him, Sarah. He's been to the exchange. Watching him work the floor here, I mean, he's leveraged his ability in an amazing way.
And I'm excited to watch this because he clearly is thinking about his legacy and his next move. He's told us he wants to own a team. He apparently tells CNBC Sport in this that he would play in the senior PGA Tour once he's eligible at 50. He's just very open and genuine and candid. So looking forward to checking this out.
Yeah, look forward to that. Meantime, Purdue hanging on to some gains here. 59.81. Money Movers is back after this.
Down, up, right, left, inside, out. Sometimes stock makes sense for nonsense. And beyond the headlines, a trusted global perspective. No weak ways on.
Oh, my bad. Let me get you the again code. I got your stuff now.
They chose to sell their policy
Twitter. Okay.
Now they're sailing through retirement. If you own a life insurance policy of $100,000 and more, you may be able to sell your cash. Get an instant estimate at overlife.com or scan the QR code on your screen. Or call 1-800-502.
I got a lot actually. Let me see how much I got. 1,150.
What if you could invest in a future where skin cancer treatment
A lot came from the shorts. I've been uploading a lot of shorts.
This groundbreaking solution delivers chemotherapy directly to the tumor site, offering a mostly painless alternative.
YouTube shorts.
With the skin cancer treatment market expected to
Because I post food and travel stuff, and then live streaming. I just do trading.
Now advancing phase 2 studies.
Yeah.
Medicus Pharma leading the charge in skin cancer innovation.
I guess I'm not the easiest person to please.
It is true though.
I like things just right. That's why I love Repton's home recommendations. They know what I want even before I do. A home that's just right.
Yeah. Yeah.
Is the Bitcoin ETF the same as owning Bitcoin directly? Well, Bitcoin ETF
Yeah, I'm about to log up too.
They lack the true ownership.
Alright guys, have a great day.
Directly investing in Bitcoin. With iTrust Capital, you can buy and sell real Bitcoin 24/7 with the tax advantages of an IRA. Real Bitcoin means no middleman, no restricted stock market hours. Choose the path of direct Bitcoin investment with iTrust Capital. Because